Today. Happy Money Thursday. It is January 20th. Obviously, it's 2022. 9 o'clock in the morning, team. We got 30 minutes till that market opens, and I am excited to be here. Even though I'm running on like 4.5, 5 hours of sleep, I'm fired up like always. I'm here to bring that energy. I'm here to bring that motivation and that pump. Let's go, team. Let's have some fun and let's absolutely crush it today once again, like we've been crushing it so far for the year of 2022. So I'm going to ask you guys for a big favor today. Help me carry this energy inside of chat, okay? I try to be 100% every single day. My daughter wasn't feeling well last night, stomach bug, maybe the flu. Again, we really do not know what's going on, but it was a late night. I don't want to give you guys too many details, but I was cleaning a lot. I was doing some laundry consistently in the bathroom. It was a long night, and I probably got about 4 to 5 hours of sleep. If I don't get my 7 hours of beauty sleep, oh my goodness, I am not feeling beautiful. Now my mind doesn't work with me 100%. So I'm just going to ask you guys for a big favor. Carry that energy today inside the chat. Keep everybody motivated. Stay hungry. Let's crush it. And most importantly, guys, let's have some fun. Let's learn together because we got an options lesson planned for today. And let's make some profits. So let's start with that hype. Let's start with that energy. Let's go ahead and start with the 3, 2, 1. Happy Money Thursday, baby. What's up, Rod? What's up, Angel? Everybody hit me with a good morning inside of chat. Hit me with a big old woo! Mr. Angel coming in. Always, Rod, what's going on? Rebecca, movie star, Steve. How we all doing today? Corey, Arlene, welcome back. Kids King. What's up, Dougie? Man, oh man, Dougie. Just makes me want to do the Dougie. I want to do the Dougie when I see your name, Dougie. What's up over on YouTube? How we all doing today? We got Anthony over on YouTube, Steven, Denise, Curtis, James, Anthony, Sleepy, Joe. How we all doing? I'm fired up, team. I know I said I'm not. I know I said I'm out of it, but hey, guys, I'm fired up. When I come inside the chat and I'm working with the best traders and the best team in the world, that just fires me up. I can be on 1 hour of sleep, and you guys still freaking fire me up. So let's go. Let's get it. Let's have some fun. Let's make some profits. We have some opportunity in the market today, and we have a value educational packed day. I know you guys really want to talk about options, so I put together part 1 of 3. Yeah, I know, 3 parts. Options are very extensive. There's a lot with options. So again, part 1 of options today. We're going to be covering the basics of options, what they are, how they work, why they exist in the first place, and simplifying the process on how to trade options. But here in the coming days, next week, we will be diving even more into options to take you guys from, hey, I do not know a lot about options, but I'm interested, I'm intrigued, I want to trade options on my small account. I see the opportunity, I see the potential, I just need that confidence, I need to be educated. We're going to get you from where you are now to that level of confidence to where you can put on those options trades and make some profits. So today, guys, get ready. because this is going to be at least one minimum of an hour long, followed by a very nice Q&A. I mean, this educational time frame, right, when we do these lessons, it's going to be a long one today. Not 20 minutes, not 30 minutes, probably an hour to an hour and a half long, guys. I want to make sure that I'm very thorough. We're talking about everything, giving you guys a solid foundation of education when it comes to options. So make sure you guys are here at 11 o'clock, okay? Right around 12, we'll be diving into an afternoon Q&A session to talk about options, to answer those questions, to give you guys live examples as well. And again, I will edit this lesson if you guys cannot be here and get it uploaded in the video lessons library. So I'm excited, team. I'm very fired up. But let's not waste any time, guys. We have about 27 minutes until that the market opens, until that ring-a-ding-ding. And we have a lot to talk about today. But I'm going to start with this, guys. I'm going to start with this right here. Okay? Markets, conditions, market conditions, market conditions. Okay? What do we know? What have we been seeing this week and last week, right? Every stock, not 100%, but I would say like 85 to 90% of the top stocks in pre-market, okay? They have great action. There's news. There's volume. You're like, oh my gosh, this is the best stock ever. It's going to go to the moon today. Even we don't use that terminology around here. There's no such thing as to the moon. To the moon means you're going down. Anyway, but that's what we've been seeing, guys. We've been seeing these top stocks in pre-market. These top gainers, 40%, 20%, high relative volume, low flow. I mean, these watch list worthy stocks. It's been happening, guys. They've been fading and falling, right? They look like they're going to be the best stocks of the day, but they are fading and falling. Which stocks are moving? Which stocks are getting that hype? Which stocks are getting that attention and actually making those moves to the upside? Prior day movers. Prior day movers. DWAC, right? BBIG. Again, prior day movers are the stocks that are the most consistent for the day. And then the random angel what? The IPO stocks, right? Like the VINE. Was it VINE? Right? You know, the newer IPO stock that just randomly pops, halts to the upside, and then does nothing. But that's kind of the market conditions right now. Is, again, the stocks that you think are going to be the best for the day are the ones that are fading and falling. So my approach on some of these top gaining stocks in pre-market is to do what? Short the crap out of them. Like, I am going to short these stocks. Normally, you'd be like, I want to go long, right? This stock has all the criteria to be a big-time runner today. Nope, I'm going to short them. Which stocks am I going to sit back and wait for? Prior day movers. Okay, so let's start there, guys, because that's where I think the opportunity is going to be, because that's where the market opportunity has been for the past almost 2 weeks now. Those are those market conditions, guys, and that's how we come in and approach our trading day, is assessing market conditions. What's the trend? What's the tone for the week? And that's how we're going to identify the best of the best of the best opportunity. Okay, so let's talk about prior day movers, just so you guys know what those prior day movers are. Now, if you guys are new to chat, when you log into chat, right, go to your live trading rooms. This is the page that you land on when you get logged in, right? We're inside of the Alpha chat room. Right here, guys, this data that you see at the top left. Sorry, I may drop stream. My internet just buffered on me. All right, so these stocks that you see here are going to be prior day movers. So we have ZGNX, acquisition, 26 a share, not worth your time. So we have GMVD, VVOS, GMDA. These were yesterday's prior day movers. So one of two things, either A, we see these stocks move a second day, right? It's a prior day mover. That's where the opportunity is, okay? Or B, what do we see? We see those stocks gap down on day number 2. And then what do we see on day number 3? Coincidentally enough, company drops press release. Stock rips in pre-market off of a mid-candle breakout. That's what we've been seeing this week, guys. SBEVT. SBEV. Friday, news, big rip to the upside. Day number 2, Tuesday, big gap down, right? Yesterday, Wednesday, mid-candle breakout in pre-market. Big time opportunity. What were we talking about last night before we ended our day? Right? We were talking about DATS. Very first thing I posted in alerts this morning, DATS high watch for the mid-candle breakout. Why? Those are market conditions. Big green day, gap down, news and pre-market on the third day, big time move to the upside. What did we see on DATS, right? DATS Tuesday, big green day. Wednesday, yesterday, gap down. Today in pre-market news, big rip to the upside. I mean, this stock went from 310, ladies and gentlemen. 310 was the low here in pre-market, and it ran almost 20% all the way to 373. That's opportunity. That's money. That's what we've been seeing. So these prior day movers, number one, what could we see? Another day of movement. Or, for example, GMVD is currently gapping down. And where are we gapping down? Right in the middle of yesterday. So we could see GMVD do what SBEV did this week, do what DATS did this morning. Gap down today, sit sideways, do absolutely nothing, and then boom, press release, mid-candle breakout, nice big rip and run. Make sure your focus today and tomorrow in pre-market is on GMVD, as this is the best candidate right now for a potential mid-candle breakout, just like what we saw on SBEV and this morning on DATS. Get prepared. That's what it's all about. It's preparation and knowing the market that you're trading in. Another top gainer yesterday was VVOS. Okay, I want to see VVOS back above 225. Okay, 225 is the 20 EMA. 225 is right around yesterday's close, actually 230. But we also have these daily lows right around 225. So VVOS, yesterday's mover, right? One of the top gainers from yesterday. I'm curious to see if this is where traders decide to go, as it's a prior day mover. And all of the fresh stocks are the ones fading and falling. So right now, I do want to put some emphasis here on these prior day movers and focus on some of these prior day movers, as we may see day number 2 to the upside. So VVOS, definitely something we're keeping on watch. Want to see the stock re-breaking 225, holding above that level. Ideally, yesterday's close as well of 230. And we do have some room up towards around $2.60. Yesterday's resistance right around actually 253 to 260. And then potentially that 285 mark. So back burner stock, just looking to see if this is where traders go, as it's a prior day mover. Same thing with GMDA, one of yesterday's top gainers. This stock yesterday from around 240, hitting these pre-market highs of $3. One thing that I do like about this stock is we had 275 support, 275 resistance, 275 resistance, 275 resistance, and the 50 SMA is right around 270, right around that 275. I'm watching GMDA today above $2.70, back up to around $3. And if we can break $3 here on GMDA, we have some potential up towards around 325 and 330. And you're probably asking, Josh, the stock's not doing anything. It's all about relative volume, news, right? This criteria is not being met. Why are we watching this? Again, if you guys are just now tuning in, it's a prior day mover. And that is the market that we're in. Those are the conditions. Prior day movers are the ones getting the action, right? Stocks that are gaining in pre-market that have that criteria being met, 80 to 85% of the time are fading and falling. Just go back and look at some of these stocks over the past 2 weeks that have gapped up on great news, high relative volume, and a low flow, meeting that criteria to be the best stock to the upside for the day. Guess what? They fade and fall. Go look at IMRN last week, INNX last week. Go look at SVEV yesterday. Go look at some of these stocks, and you'll see see exactly what he's saying. And then go look at the prior day mover list. Oh, wow, that moved again the second day, the third day. That's kind of what's going on in the market. So that's why we're starting with those prior day movers, the top 3. Again, we got GMDA, probably my favorite prior day mover that I think has some good potential. VVOS, number 2, I'm like 50-50 with it. In GMVD, I'm really liking this one potentially tomorrow for a mid-candle breakout. Okay, so those are prior day movers. We also have some other prior day movers that we should keep on watch today. Correct, team? We should watch SBEV. SBEV, big time mover in pre-market. Great news. What did it do yesterday? Faded and fell all the way down. We had a little bit of a gap to fill. We closed it around 390. Gap to fill off the mid candle at 345. We came down towards around 355 here in pre-market. So I'm going to be watching SBEV today for a possible bounce around 345 to 350 at the lowest, It may not make it that low. We just broke this downtrend. We could see it open and start ripping back over 4. But I think SBEV has some good potential today to have another day to the upside. Okay, so I do want to watch SBEV today above 345 to 350. Again, we just broke this downtrend back above $4. That's where I think a lot of volume is going to really start moving back in, pushing the stock back up towards around 450 and then $5 here on SBEV. Long term as well, I think SBEV still has a lot of great potential to the upside based on the news that has been dropping over the past few days now that we discussed on Friday. So SBEV is going to remain on the watch list as we may continue to see more news drop and see some action here on SBEV over the coming weeks and maybe even over the coming months. All right, we all know where we're going next. DWAC, right? DWAC here. So first big red day yesterday, nice pullback, healthy pullback. We needed it. But we know how the markets move. Moves in like impulses, right? So you got impulse number 1, pullback number 1. Impulse number 2, pullback number 2. The third impulse is normally the third and final big leg to the upside. But when you get that second pullback, normally it's a 2 to 3 day pullback. So you got impulse 1, you got a single day pullback. We call that a hiccup candle, right? Impulse number 2. Now we're working on pullback number 2 on DWAC. Again, nothing's ever 100%, but normally what you see is a 2 to 3 day pullback into these what we call hiccup levels, these candles that stall in the middle of an uptrend and then the uptrend continues. So I would think DWAC has a little bit more room to the downside before I'm interested in getting back involved in this stock. We could see it all the way back down towards around 74.38. That's a good area to potentially see the stock hold above and bounce. And then we do have this slight gap that needs filled down towards around 71. So I would think coming into today, I'm not trying to predict what's going to happen with DWAC because it could actually just rip right out of the gate and it may never make it that low. But we're getting prepared. If it does come down to 74.38, that's a good level to keep on watch. Why? It's that upper shadow off the hiccup candle. That could be the bounce area for the reversal for the move higher on that third leg up. Same thing, we have the gap to fill. If we see it come down towards around 71 and you see some great buying pressure, hey, that could be that pullback low before buyers move back in for that third and final leg to the upside. So right now, that's what I'm looking at here on DWAC. If we see it down towards around one of those levels, I'm getting interested. I'm starting to plan and prepare, maybe looking for entries here on DWAC. But right now, I'm not touching it. I'm going to wait for this trade to develop a little bit here at the open, see what it does, okay? And if it does set up and it never makes it down that low, let's get prepared at that time. Let's see if there's any opportunity, and let's simply attack and react to that opportunity. But those are the levels I'm looking at and why I'm currently looking at those levels here. And it's simply a game of patience with a capital P-A-Y. Anything could happen, but I'm going to be patient to see if one of those two levels can be hit, because that's an even better entry versus 78. DWAC still has a lot of hype, still has a lot of focus. We still have some attention. We could still see the stock back up towards around 91 and even $100 next there on DWAC. BBIG did exactly what we thought it was going to do. Yes, we tried taking BBIG yesterday for the break. Didn't work out. Very small loss. I think like 5 cents or so there on BBIG. So nothing too crazy. And it faded all the way back down and filled the daily gap right there at 404 and also bounced off the 200-day moving average. And we saw a really nice bounce. Filled the gap, retested the 200 SMA. Really nice bounce. We're definitely keeping BBIG today on watch above that $4 level. Okay, so as long as we're above $4, right, and we see some structure and some buying pressure, I think we could see BBIG start to move back to the upside once again today, possibly into tomorrow as well. So right now, support's right around $4. I don't want to see it drop below that level. If it drops below 4 and it can't get back above, I may look to short this down to $3.50 and $3. Okay, so we are watching BBIG, prior day mover, a lot of hype, a lot of focus around this stock. Technicals look good. Again, came down and filled the gap and also bounced off the 200-day moving average, exactly what we thought it was going to do. Now we just look to see if it's going to stay above 4. And if it does, and we see that good buying pressure, I think that's a good area to start maybe getting involved here on BBIG for the next leg up. We would have some room up towards around yesterday's close of 450. We have some room up towards around 479. $5, and then yesterday's highs of $5.35 here on BBIG. Okay. I am watching MYNZ as well. It's a prior day mover, just like, DWAC and BBIG. One of two things I'm looking at. MYNZ has like a really ugly mid-candle breakout, but it's kind of setting up for a mid-candle breakout. I mean, not the best, but you kind of see that it's kind of. It's ugly, it's sloppy, but it's a mid-candle breakout, kind of. Okay, so I'm kind of watching it for that. We are gapping down. I'm looking to see if it starts breaking back above yesterday's close and yesterday's low, right? That's the criteria for a mid-candle breakout. Gap down, right? Starting to break above the prior day's lows and close, and that's where we see volume move in. So I'm looking at MYNZ for a possible mid-candle breakout. If we don't see that, okay, and it's like, okay, this is definitely not a mid-candle breakout. We should not be looking at it for a mid-candle breakout. It's not meeting the criteria. Let's scratch that. We have a gap that needs filled down towards around 2084. So if we crack below 2251, I would look to short MYNZ down for a gap fill, and then potentially flip long when it comes down to this gap fill level and try and capitalize on it for a gap fill bounce. So I would short it for the gap fill. I would cover my position and then potentially flip long for that potential bounce after we fill the gap. So we have three different ways we could trade MYNZ. Maybe it's a mid-candle breakout. Let's keep it on watch, right? We can short it for the gap fill, and then we could possibly go long for the gap fill bounce. Three different approaches. Let's see if it gives us one of those three opportunities. We have some opportunity possibly here on MYNZ today. IMRN is another stock, not the best. It wasn't very nice like SPEV. I mean, that was a beautiful mid-candle breakout. DATS was a very nice mid-candle breakout as well. We kind of see the same formation with IMRN, right? Big green day there on Tuesday, gap down and set sideways yesterday. So right now we're looking to see if this stock can start to re-break above, I would say just $4, guys. Keep it easy, keep it simple. $4 re-breaking. We have room back up to 440, which was, again, Tuesday's highs. And then IMRN up towards around $5. Again, not the best, right? Not the best looking stock right now, especially in pre-markets. But again, prior day movers are the stocks that just randomly get the volume and they start ripping for the day. That's why we should keep IMRN on watch. It may not do anything. We may take it off the watch list, but for right now, it should be on watch. And I know we have a lot of stocks on watch. I do not like having this many stocks on watch, but there's a lot of different opportunities. So what are we going to do? High day momentum scanner, halt resume scanner, breakout scanner. If one of these stocks we see hitting these scanners, we know that's where traders are going. We're already prepared and we can jump on in and take advantage of that opportunity. Okay. Now let's talk about stocks that have news today. Okay. And you already know how I'm playing these stocks, right? My mindset, my approach is to not go long on these stocks with news, but look for short opportunities because these stocks with news that are ripping and running in pre-market typically fade and fall. Now, that's not 100% of the time, right? Was it BBI? That was the one stock that had great news, high relative volume, and it moved there on Tuesday, right? So again, it's not all of the time, but we see it more consistently. We see it more consistently across the board. So APM, what's going on here with this stock? They received FDA orphan drug designation. That's why APM is up 37.7%. It's trading really high relative volume, okay? And it's a low float stock as well. This stock has support down towards around 160, resistance here around 177 to 180, these pre-market highs. If this stock does not fade and fall, and this is a stock maybe like BBI that actually moves up today, we have room to 195 and then $2. So again, 160 support, 177 to 180 pre-market resistance. Anything over those pre-market highs, we have room to 195 and then $2 there on APM. But if we see any kind of solid bearish setup, and I'm like, wow, that's a good short, I will look to short APM. All right, because again, I think we could see an all-day fader like we've seen the last 2 weeks. Same thing with DATS. You're like, but Josh, mid-candle breakout. It has news. What are you doing? Why? Well, what did SPEV do yesterday? Right? Mid-candle breakout, had news, high relative volume. What did the stock do yesterday? Didn't do anything. Faded and fell all day. phenomenal short. Thinking we could see the same thing again today on DATS. If this stock does not break above 380, I will look to short the stock today, all right, on DATS. So again, why is the stock even up in the first place? Why is it trading high relative volume? Why is it up 16%? Well, we do have news. Signing a letter of intent to acquire a security corporation for $1 million in cash. That's pretty good news. Letter of intent. So that's why we saw DATS ripping. But we also knew that it had potential today off of the mid-candle breakout. But again, as long as it doesn't look really good to the long side, right, and we see some selling pressure around 380, as long as we're not breaking above 380, I would look to take this for maybe an all-day fader to the short side here on DATS. But if it breaks, okay, if I'm wrong, and it breaks above 380, and this is a stock that doesn't do what every other stock's done, fade and fall, and we do see a nice green day here, we got to break that 50 SMA. Right, we have to break that 50 SMA, and we have to break above $4. That's when we have some great opportunity to the upside, right? And there's pretty big window of opportunity. I mean, we don't really have a lot of big resistance until $6, right? So you got $5 natural resistance and then $6 daily resistance. So, I mean, this stock does have a lot of great potential to the upside, but again, market conditions, as long as we're not breaking 380, I may think about shorting the stock for an all-day fader. Okay, again, we have good news, high relative volume. Everything looks good for a long today, but be mindful about those market conditions, guys. We are watching DATS out of the gate. Okay, MRKR. FDA orphan drug designation in regards to cancer. So, I mean, FDA orphan drug designation, keyword, cancer related. I know the stock's doing absolutely nothing right now. Absolutely nothing. But with that being said, there may be opportunity here. So again, it's another stock that you're putting on your back burner. Back burner, has news, right? Not a lot of volume, but it has news. Cancer related, this could be a sleeper play. This stock could literally just kind of slide underneath everybody's radar and just be a slow sleeper play for the day because the news isn't that bad. So MRKR, I just want to bring that to your attention as there is good news, and it could be one of those stocks that kind of just sleep under everybody's radar, right? And it could be something that moves today. So we'll keep that on watch as well. And then we have WIMI last but not least. WIMI receiving FCC approval to enter the US market, all right? So WIMI is actually one of my metaverse plays, right? We're looking at like AR, VR, holograms. So again, this is a hologram related stock. This is on my metaverse watch list. So again, this is something I've been eyeballing over the past few months now, or a couple months. It's worth keeping on watch. We have some news. It had a nice big green day yesterday. And I want to see it above $3, right? If we can stay above $3, we have some potential today. You know, we can see it back up towards around 350, maybe even 358 on WIMI. But again, it's a sleeper play. It's not doing anything right now. Could it move? Yes. Could it fade and fall? Absolutely. We will absolutely be cleaning up this watch list over the first 10 to 15 minutes out of the gate. So half of these stocks will probably go bye-bye. Okay, so what stocks do I want to focus on out of the gate? I'm definitely thinking I want to be watching SBEV, prior day mover. Definitely want to be watching BBIG above 4, right? I definitely want to watch SOFI above 1470. We have room to 15 and then 16 on SOFI. We know we had good news there Tuesday night. And I would say, obviously, DATS for the short, right? DATS for the short here today. But then the other stock that I think could get some movement that's a prior day mover that's kind of sleeping right now is going to be GMDA. Okay, I would say GMDA. So let's do this. Let's see what you guys are thinking. All right, we talked about a lot. There's a lot moving. Again, it's a very noisy morning. There's a big watch list. I'm not a fan of having a lot of stocks on watch, but we can see that there's a decent amount of opportunity out there. But we just got to remember to sit back, be patient, right? Clean up that watch list the first 5-10 minutes. Figure out where other traders are going. Focus on those stocks, right? Wait for your opportunity. You don't have to trade the first 15 minutes. You don't have to trade the first 30 minutes. Doesn't matter how quick you make money. What matters is how much you close your day with. So if you're not trading the first 30 minutes because you're just waiting to see where the best opportunity is to eliminate more of this noise, to get prepared, that's what we have to do. That's what I'm going to be doing, guys. As you can see, I don't even have my broker open right now. I don't even have my broker open because, again, I don't really plan on trading the first 15 to 20 minutes because I think it's a noisy day and I want to be certain that I'm on the right stock for the day, okay? So I'm going to go ahead and cast a vote here inside the chat, right? We got a poll coming on up. What stock do you think is going to do the best today, all right? So what stock do you think is going to do the best today? Right here, the poll is in. Cast your vote. Do you think it's going to be DATS? Do you think it's going to be APM, BBIG, DWAC, GMDA, or something else? What are you guys thinking? I'm going to say the best stock today. I'm going to go with BBIG. There we go. Let's see what you guys are thinking, all right? Now, we got about a minute to go. Okay, minute to go. I'm watching lows today to the short side. Lows below 234. I'm looking to short this to 231. Netflix has earnings tonight. No trades that I see. I just want to watch it today, knowing we have earnings this evening. Goldman Sachs below 346.24. I'm looking to short this down to 342.67. Home Depot below 359.38. We have so much room to fall. I don't think we're going to fall this much today, but this could be a good multi-day short swing. We have room down to 345.67. So again, if we crack below that 359, I'm definitely looking to go short on Home Depot, not only for a day trade, maybe for a little bit of a swing trade as well. The SPY and the Qs right now, what have we been doing the last couple of days? Waiting. All right? Let's see how it sets up intraday. Let's get some conviction. Let's get a good opportunity. And let's continue to make money on the SPY and the Qs. I don't know what's going to happen today on the SPY and the Qs. I can't predict the close, and I don't want to predict the close, right? I want to sit back, wait for some intraday opportunity, right? Watch for a setup, and then react to it. We didn't talk about the SPY yesterday in pre-market. We didn't really talk about the Qs, but what happened? We had a killer short opportunity on the SPY. We noticed it right around 10 o'clock. We explained it. We broke it down very thoroughly. And what did we do? We took advantage of the short. We made $2 a share. That's how far it moved. $2 off the short. Absolutely amazing. But we didn't even look at it in pre-market. What did we do? We waited for the stock to develop a little bit out of the gate. And then we said, okay, this is what we see. This is what we think can happen. If this happens, I will short the stock. It happened. We reacted. We shorted the stock. Made some good profits. All right. So let's have some fun today, team. Let's get hyped up. Let's get prepared. I know there's a lot of information, guys. There was a lot of stocks we were talking about. But again, this is everything that's going through my mind. This is everything that's going through my head. And I want to share this with you guys, right? What am I doing this morning? How am I getting prepared? What's my mindset? What do I think about the market? How am I going to take advantage of the opportunity, right? And how am I getting prepared? And what am I going to do the first 10 to 15 minutes? Clean up that watch list. Clean up that watch list. So right now, what do you guys think is going to be the top stock of the day? We didn't even check the votes, guys. What are you guys thinking here? So it looks like 38% of chat saying other, right? We got 23% of chat saying it's going to be BBIG. All right. So yeah. So again, you guys are looking right now here at BBIG, but other. So something we didn't even list on the poll. So let's sit back and wait to see what happens. We're looking at the breakout scanner. We're looking at the high of the day momentum scanner. We're looking at our halt and resume scanner as well. And we're all set, ready to rock and ready to roll, team. So let's make it happen, team. Let's make it happen. Let's get fired up. As you guys can see, my broker is not even open right now. Not even open. Should I go ahead and open it? Yeah, let's go ahead and open it real quick. I can't even get logged in. All right, so I guess there's a reason why it didn't open. I can't even get logged in right now. Maybe I need an update. Probably need to update it. So right now, I can't even open up my Lightspeed, and I don't have time to call them and email them. I'm not even going to worry about it. I'll trade Fidelity today, guys. I won't even trade my main account. I'll just trade Fidelity with you guys. Sound good? Let's make it happen. Let's trade Fidelity. All right, so right now, again, we are watching WIMI is like a sleeper play for the day, guys. Good news. Above yesterday's close and above the 20 EMA. WIMI has room to 348 as long as it stays above $3. DATS right now, again, looks like Angel was even asking, like, hey, do you call the broker ahead of time to short? Yes, you basically need to call them. Say, hey, I want to short this stock. They're going to say, how many shares? You're going to say 1,000. They're going to say, it's going to cost you $50. Do you accept? You're going to say, yes. You're going to say, all right, those shorts are now active in your account. You can short sell those 1,000 shares. So you have to call them, say you want to short the stock. They're going to locate them for you. They're going to charge you a fee. And if you accept, you have to use those today. If not, they go bye-bye tomorrow. So SOFI with a big rip out of the gate. BBIG's bouncing off the 200 SMA, guys. So we want to keep this one on watch above that 411 area. So I would say like 410, 411 is that level of support for BBIG that you really want to see the stock holding above if we can get another, leg to the upside today. Again, you have room to 450 and then 479 there on BBIG. And I am watching SBEV as well. Maybe back down towards around 345 to 350. DBGI right here. Dropped the press release at 9 o'clock. Oh, no, it was halted. So halted, shares resumed at 9. Digital brand group to acquire lifestyle apparel brand Sundry. So we were halted, pending news. We are now live here at 9 o'clock. And this stock has been moving again since 9 o'clock. I didn't even notice that stock was halted, pending news. Which is really cool. Heck, you can't even do a locate on Fidelity. I haven't seen a locate on Fidelity. You're saying E-Trade will actually present you the borrow rate on screen. That's pretty cool on E-Trade. Same thing with Lightspeed. You can actually do a locate right then and there. It'll show you the borrow rate. It'll let you locate and accept, and automatically through the platform. You don't have to call them or anything like that. So again, right now, it's all about cleaning up that watch list, guys. It doesn't matter if you make money the first 10 minutes, the first hour. What matters is how much are you walking away with for the day. Your trade could come literally at 355. Boom, 355, you make your money. Doesn't matter if you make it at 10 or 355. What matters is what are you walking away with. Right now, it's all about cleaning up that watch list, guys. So again, I'm watching some of these larger caps out of the gate. Lowe's, Goldman Sachs, Home Depot. I'm actually kind of watching Goldman Sachs here. This one has a pretty decent window to the downside. Cracking below that 346 down to like 343 there on GS. So I am watching GS here. And that's Goldman Sachs. And just looking to see what happens here on this. Lows, same thing. Below yesterday's low of 234.27. It's got about $4 to the downside there over on Lowe's. And then same thing with Home Depot. We can break low a day here. This thing's got a lot of room to fall, guys. Got a lot of room to fall there on HD. What's the spread? The spread on this stock usually kind of sucks. 359.27, 359.57. It's actually not that bad. It's about 30 cents here on Home Depot. So yeah, DATS up at 380 here, guys. DATS there at $3.80. So let's go watch DATS, guys. This one got some nice action here right up to 380. Let's see if it's actually going to break and hold 380. If so, we can take it long, guys. We could absolutely take it long. Right now, let's just look and see. Is it going to top out and fade today like a lot of these other top gainers? Or is this stock actually going to get some action to the upside? Time will tell. BXRX, you say BXRX. That was another stock this morning. Was BXRX that had no news, but this stock is getting some nice action to the upside here. We're on BXRX. BXRX has room to fill that daily gap, team. That daily gap right there at 31 cents. You know, we can fill that gap, maybe even hit 33 cents here. 33 cents would be the 50 SMA if you guys are watching BXRX. PIXY, Pixie. We were watching Pixie a little bit yesterday. PIXY. This one has room to 2. Support is 167, though. That's the thing. Support's all the way back down around 167, but let's see if it can hold these pre-market highs. All right, let's see if PIXY can hold those pre-market highs right around 184. Got light support around 184 pre-market highs. If you crack below 184, you can definitely come down towards around that 167, but it has room to $2. $2 is your main level of resistance here over on PIXY. GMVD definitely looking good tomorrow if we hold like this for a mid-candle breakout. So I'm definitely liking GMVD. Remember GMDA, guys? Remember GMDA? This was a prior day mover that we said, hey, these prior day movers are the ones that are getting the most amount of action. You do have GMDA moving up as well, but I'd say the volume's still a little scattered at this time. All right, you got BXRX ripping, right? You got APM trying to get some action to the upside. You had DATS moving to the upside. It's really like trying to be patient and figuring out what the best opportunity is. The last thing that you guys want to do is jump into a stock and watch it fade and fall, and another stock really get that action that really steals the activity and the focus in the market. So again, right now, we're only 11 minutes in, guys. We're 11 minutes into the market. Okay? If you're not in anything, it's okay. It's still early. Be patient, right? Just because it's moving doesn't mean you have to trade it. Okay? Sit back, wait for your setup, wait for the opportunity, and let's make it happen. Watch MYNZ for the gap fill down towards around 2084. If you guys like dip buy opportunities, this would be a good little dip buy opportunity here on MYNZ for a gap fill bounce, right? Filling the gap down towards around 2088, towards around 2094. A little bit of gap fill bounce, right? A little bit of a dip buy. Maybe you catch 50 cents, maybe a little bit of $1 out of that stock here. So definitely keep this one on watch, guys. MYNZ for the gap fill bounce. APM above 160 looks good, right? Keep your stops very tight. If you like APM, there was good news. APM is a low float stock as well. Above 160, it shows potential back up towards around these pre-market highs, right around 180 to 183. If it starts cracking below 150, it'll most likely fade and fall all the way back down into the 120s today. They're on APM, so make sure you're keeping your stops very, very tight. As again, we've seen a lot of these top gainers fade and fall a little bit. How's SBEV doing? SBEV is not doing anything right now. DWAC getting a nice little grind to the upside. So DWAC got a decent amount of resistance right around 83, right? Yesterday's resistance, a lot of resistance at 83 on DWAC, but over 83, you could see it up towards around 84, 86 there on DWAC. Again, right now, I don't have any positions going. Just sitting back, relaxing, guys. Waiting for my setup. Waiting for the best of the best of the best opportunity. That's what it's all about. Just waiting for that best opportunity, guys, to get involved. Right now, we're cleaning the watch list. We're cleaning it on up. Clean, clean, clean the watch list. Clean it on up. Yeah, you like that? You like that? That song? Exactly. Patience, team. Patience with a capital P-A-Y. When I say it like that, P-A-Y. You're in the game. EA Sports. Yeah, so it's just patience, guys. Sitting back, kind of just looking through these stocks periodically, looking to see if you see something that looks appealing, right? Oh, wow, that looks appealing. Okay, let's get prepared. Let's build a plan. All right, do you guys see anything right now that looks appealing? The only thing that I see was APM above 160, up to 180 and then 195. So that was the only thing that I was seeing there was APM above 160, stopping out below 150. Again, you have some room to 180. It's barely a 2-to-1 setup, but it is a 2-to-1. It's holding above the point of control. It's holding above the VWAP. It's holding above the 9 EMA, and it's also holding above where we opened. So right now, I mean, you got a couple levels of support here. Also some resistance and support from pre-market, right? So, I mean, 160 is not a bad little level to see the stock stay above, and if it can, you have room to 180. But if we crack below 150, watch for this to fade and fall all the way back down into the 120s. Tesla's on, making a nice little move here. BABA fading and falling. HD trying to bounce off that level. Goldman Sachs trying to bounce a little bit. Netflix, just watching it for earnings tonight. Lowe's trying to bounce off that level as well. So nothing really going on right now there. WIMI, not really doing anything. Let's take WIMI off watch for now. Again, as long as DATS is below 380, that's not a bad short. Right? It's not a bad short as long as we see the stock being rejected off this 380 level. One thing that we can do as well is run a trend line on DATS team. Okay, so we have this nice little uptrend here on DATS, right? If this one pops up and double tops at 380, and if this cracks the uptrend, that could be your confirmation to enter a short position here on DATS for a potential fader today. So you got APM still holding on up above 160. Again, room to 180. That's the only stock right now that looks somewhat appealing. Right? It's not the best. It's not a killer setup, but I mean, it's the one stock that's holding above a few key technical support levels. So again, 160 to 180, stop out under 150, guys. Now you said, yeah, TKAT. That's a prior mover. I remember TKAT was a supernova back in the day. That stock went from around like $1 to 74. Why is TKAT getting action? Is there any credible reason as to why TKAT is getting any kind of action, guys? I don't see anything on TKAT from a like a fundamental standpoint, like a press release. But you got a little bit of this double bottom on TKAT, so it could just be a little bit of this technical double bottom bounce that traders are looking at. Getting a little bit of action here. TKAT is a low float stock. It's a former supernova. Again, coming down and finding this decent little double bottom here. Last time you saw a decent double bottom on TKAT, you had a couple days to the upside. You know, it had a nice little bounce, right? Little double bottom, little bounce. I mean, you could see a decent little bounce on TKAT, but where can it go, right? Well, you have a lot of resistance right there around 380, team. Look at all that 380 resistance, 375 to 380 resistance, but we could see it move higher, and if it can, you got room to 432. You have room towards around 432 here on TKAT. So TKAT was halted at 945.06. We'll be live at 950.06, but just know you got some resistance at 375 to 380. But if TKAT can break that level of resistance, you have room to 4 and then 432. Simply just bouncing off the daily chart. Just a little bit of this double bottom. It's a former supernova stock, low float. You just have some traders moving on into it right now because across the board, it's really not a lot going on. Boom, double top, crack of the downtrend or the uptrend on DATS. Anybody grab a short there? I don't know if it was shortable for you guys, but again, double top off 380, cracking the uptrend. That was a confirmation for a short entry on DATS. Now let's see if we get that nice all-day fader here on DATS like we've seen across the board on some of these penny stocks, guys. Let's see if we get that nice all-day fader here. What? What? Who took it short? Someone took it short? 6,000, but what? Who? Where? When? Huh? Woo! Wow. So now we want to crack that VWAP, lose that point of control. I'm not sure the entry. Every time I scroll up, it kind of backs me out. So short DATS 352. Cool. Well, that's cool. Crack of the trend line, right? That would have been an entry right on like 374, 372-ish. Got a nice tight stop over high a day, right? Double top, crack of the uptrend, right? Entries were probably around 371, 372. Stops are right over high a day. And you're just looking for this to continue its nice little downtrend, slow and steady throughout the day. You have room back down. One of your main targets is going to be 320. They're on DATS, right around 320 there. APM struggling. Again, DATS. I mean, we feel like we saw that coming, right? I feel like we saw that coming. You know, I only talked about it like 1,000 times. I was extra repetitive. You guys like, shut up, Josh. Shut up. Yes, DATS, short, market conditions. I freaking get it. Quit talking about it. Hey, listen, you never know when a new trader's going to pop inside a chat. And they're like, what are you talking about, dude? What you talking about? I got you. So, again, right now, you know, if I was in this short position, which again, I can't even get my broker open right now, my stop would be over high at day. Below the point of control, below that 90 EMA, let's crack below that VWAP now, right? It may bounce back up, right? You may see it bounce back up a little bit and then continue the trend and then bounce back up and continue the trend. So again, stocks will bounce and then roll back over, and they will bounce and roll back over and bounce and roll back over. So as long as you're not breaking high a day and you get those little bounces, that's common. That's normal. Don't let those bounces scare you out of a trade that you're confident with, that you're convicted in. Because again, stocks do bounce, right? Stocks pull back and rip, pull back and rip. Stocks, when they're falling, they'll bounce and then roll back over, bounce and then roll back over. It's normal. It's healthy. So just trade the chart, look at your levels, honor your plan, and make it happen. SOFI, new high a day here, 1491. Looking for a 15 break, right? Looking for that $15 break here over on SOFI, as SOFI has some room up towards around $16. if we can break over 15. I love it. You got some SoFi calls there for March, but these big gains are tempting. Yo, always take your profits, man. I mean, this is up $1. I mean, this is up about $1 on the day. I mean, I'm sure those calls are doing really nice for you, right? I'm sure those calls are doing really nice for you. Don't be greedy. Always be taking profits, right? Always be taking profits. We want to make money. We don't want to give those profits back. We want to be locking in those profits. So good job on those calls, Corey. Way to crush that. I have a feeling. I still got that feeling that DWAC has a little room to the downside. Yes, it bounced out of the gate here about $3, but there's still something about DWAC that makes me believe, not feel, not emotional, but just looking at the charts that we still have a little bit of room to the downside towards around that 74.38, guys. So I'm not touching DWAC yet. I'm still being very patient on that stock. Not touching BBIG yet either. Here's SOFI, 1501, new high a day. So this is the stock, guys. This is where our focus should be here. What? $10 strikes? Ow! Oh, that gets me all, it tickles me on the inside, Corey. It tickles. Good stuff, man. Good stuff. Way to come after it, man. Way to come crush it. What I'm talking about. That is good stuff, man. I tell you what, that is great stuff. I'm excited for you. I'm not even making those profits, but I'm excited for you because you're making some killer cash. $11 strike, $10 strike. You are $5 deep in the moolah right now, my friend. So good job and good work. Now, if we're looking at SOFI, guys, yes, you could see it come back down to those levels of resistance, right? You had a resistance at 1481, then the breakout, right? Then the breakout. But you could see it as low as 1460, right? So, I mean, you could see it as low as 1460 support, but right now, this thing is just breaking out. This thing is not slowing down. Over 15 now, you want to see it above 15. You want to see it stay above $15, okay? If it does crack below $15, back down towards around 1480. Right? That's a good level of support, 1480. If it cracks 1480, your better level of support is going to be 1461. So we would classify this as stronger support at 1460. We would classify this as decent support, light support, 1480. But $15 is a psychological level. So I would like to see the stock stay above $15 now that we broke out on good volume, right? We actually had nice volume along that breakout. That shows strength. That is a good sign that we can continue higher. Next target to the upside is $16 here. How's the SPY looking? Let's go look at the SPY. Right now, next level that we could see the SPY go to is going to be 458. All right, so 458 there on the SPY. Actually, let's dive into that a little bit more. You're actually at resistance. Okay, you're actually at, what was that, Tuesday? Tuesday's close, and also the low from the 10th of January. So right now, this is a level of resistance on the SPY. However, if we break over that 456.53, your next level to the upside is going to be that 458 here on the SPY. And right now, run a trend line on that bad boy. Run a trend line on the bad boy, and you kind of do the same thing you did yesterday on the SPY. If you see any kind of divergence, you see any selling pressure, you see a double top, again, like what we saw yesterday, followed by a crack of the uptrend, that's a good potential for a short, guys. Right? And that was the same approach that we took yesterday here on the SPY. So run yourself a nice little trend line here. Your next level of resistance is going to be yesterday's open, which is 456.53 there on the SPY. Again, I know you guys are you guys trade options, and I know you guys are looking at the SPY and the Qs, so I always want to make sure that I'm giving you guys that analysis over on the SPY and on the Qs as well. You guys have any stocks you want me to take a peek at real quick? Now, I do the same thing here on the Qs. I'd run a nice little uptrend here on the Qs, guys. Right? And kind of look for the same thing. Right? Mark up your level of resistance. Where's your next level of resistance here on the Qs? Up towards around 374. So right now, I'm just being patient with the SPY, with the Qs. Right now, holding an uptrend, right? The trend is your friend. You'd only want to really take this long on the Qs. You'd really only want to take the SPY long as well until you see something, right? Double top, you see some bearish divergence, you crack the 9 EMA and the trend line, right? You go from the bullish side of the trend line to the bearish side. That's when you want to short the stock. Wait for your confirmation, wait for your entry. Okay, right now, you do not want to trade against the trend. The trend is your friend. We still have room to 458 here on the SPY. And looking at the Qs, we still have some room up towards around 374. Let's get that all-day fader on DATS. That would be great. Even though I'm not in the trade, that'd be great. What are we seeing right now as well on DATS that I like? Right? Starting to see that 9 EMA cross the VWAP, and which is a slight, right? Nothing crazy, but it's a good bearish signal when you start to see that 9 EMA crossing the VWAP to the downside. It's a good bullish signal when you see it crossing to the upside. So right now, you're starting to see that 9 EMA cross below here, the VWAP, and that could be a good indication for the next leg down, as we are in a decent little downtrend here on DATS. And we can even run a nice little downtrend here on DATS, right? Nice little downtrend. So let's see if we can stay below the VWAP, the 9 EMA, that point of control, and this downtrend as well, and see if we can continue the fade and fall back down. I would say low a day and some pre-market lows right around like 332. I'd say like 332 and then 320 there on DATS. Again, APM above 160. We had room to 180. It's just taken a long time. It's very choppy stock. It's taken a decent amount of time to actually get some action here on APM. So I'd run a very tight stop on that. And I'd run a really, really tight stop loss on APM. If you're in at 160, I mean, I would throw some stops at maybe like 157. And then off to the side, I'm watching Home Depot. Just looking to see if this one gets rejected here at like 361.30-ish. Seeing if it falls back below the VWAP. Seeing if we can turn bearish here on Home Depot. I mean, looking at that daily chart, definitely showing a lot of room to the downside. So I am curious to see if Home Depot end up getting that crack on down for a nice little short. SPY breaking the trend. Yeah, no close yet. It's still, let's see. Is this a double top? Right? Could that be a double top? Could that be a uptrend crack followed by a retest? Right? Still be patient here. Don't jump in yet. You could easily see this right back up, and then we just have to readjust this trend line. Right? Trend lines are very subjective. Okay? So it's just an indication, but we don't want to jump in quite yet because we didn't have a double top followed by a crack of the trend line. We actually just slightly cracked and then pushing right back up. So we could have something here on the SPY. But let's see how this candle closes here. Let's see if we can possibly start to roll over a little bit. So here we go. So that could be a little entry here. So that was a crack of the uptrend team, a retest, right, of the uptrend support as uptrend resistance now, and it's a quick little double top. So this would be officially confirmed once we crack the neckline, right? Once we crack the neckline of the double top, and the neckline right here is going to be 456.30, 456.37-ish. Cracking below the 9 EMA, the neckline, that would definitely confirm the double top. And you see the crack of the uptrend, right? Followed by the retest. Uptrend support, cracking it. Now it turns into resistance, and this could be where we start to curl on over. But right now, I'd be patient for that crack of the neckline, right? I'd really want to wait for that solid confirmation. It's not like we have any kind of like clear divergence. You know, yesterday was divergence off resistance, right? It was divergence off resistance, and that was just absolutely beautiful. Right now, got to be a little bit more patient, in my opinion, and wait for that neckline crack to really confirm the double top and the crack of the trend line here. Watch BBIG back above 410, guys. BBIG is on high watch right now. You definitely want to keep this on high watch. Back above 410 team. Okay, back above 410 on BBIG, a break and hold. That looks good. It doesn't look bad at all. So high watch here on BBIG, guys. A little bit of this 9 EMA VWAP squeeze. That could definitely help this squeeze and re-break that 200 SMA. The 200 SMA is at 410. Breaking and holding above 410, it is now on the bullish side of that 200 SMA, and we can definitely see some nice action move back in, back up towards around high a day at 438 there on BBIG. And you're starting to see that rollover on the SPY now. You're starting to see that roll on over, so that's good. Definitely what we wanted to see there. We wanted to see the double top, the crack of the trend line, but we still haven't lost that 456.30 yet. So we still haven't cracked below that level. That would be good confirmation to really see that next wave of selling pressure, you know, start to move in on the SPY. Once we get that candle closure. SoFi is strong. If you're looking at SOFI, SoFi is a very strong stock to the upside right now. It looks really great. You know, this is a quick little ascending triangle breakout on SOFI. Anything over 15 doesn't look bad, guys. Anything over 15 bucks on SOFI doesn't look all that bad. And again, has room to $16 and then $16.43 today. They're on SOFI. I'm already in SOFI from, I think it was Tuesday night when I saw the news. I jumped in low 14s. I think it was like right at 14 bucks even. So I've already had a swing trade on SOFI since Tuesday night when the news was dropped. And I haven't done anything with it yet. So I'm still holding it at a cost basis of 14.03. They're on SOFI. So right now I'm just still working with this. I'm going to try and take this up to 16 bucks as I think it has room to 16. Again, you're watching BBIG for a break and a hold above 410, right? You want to see it break first, come back down and retest, right? Come back down and retest 410 and actually prove itself that this is support. Then, and only then, are you ready for an entry on BBIG, okay? You don't want to jump in too early, do you? Do you want to be in prematurely? Right? You want to be chasing it like, oh, I think it's going to break, it not break, and then it come crashing down. You take an unnecessary loss. Absolutely not. Okay. What do you want to do? Be patient. Wait for the break over that level, the retest. And when you actually see that retest, that's when you can start making some entries above the level of support, not under support, but above support. Boop, 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 boop. You can definitely see it back up to those highs right around 440 there on BBIG, but you want to wait for the break, for the retest, right? Resistance turning into support, then and only then are you ready for an entry. As long as you're under 410, you are still bearish, and I don't really want to be trading against the trend here, especially when it's on the bearish side of the that 200 SMA. So the SPY confirmed here. That's a little bit of a triple top there on the SPY. A little bit of that triple top on the SPY. Bang, bang, bang. Cracking the neckline. So right now, you are on the bearish side of the trend line. You also have a nice triple top. That is a reversal formation. Next leg to the downside, if you are watching the SPY or if you're in the SPY off the double top, triple top, crack of the uptrend, or you're getting in at the crack of the neckline, your next level of support where you would want to lock in some profit would be 455.37. I'd be putting stops over high a day. A candle closure over high a day, that's a signal that you're probably going to move up to 458. That's where I would start cutting that. How the Qs looking? The Qs are cracking their trend line as well, guys. Qs cracking the trend line as well. So it's the same approach. Same approach as the SPY. Bullish side of the trend line. When you crack it, it's the bearish side, right? So right now you went from bullish to bearish, and you topped out right there around 372.70. So right now you're watching the Qs as well for that reversal back down towards around 371 would be your level of support to lock in some profits on the Qs. VIX is pulling on back down, so less fear in the markets. We'll see, though, because yesterday it was pulling back a little bit on the VIX, and then it shot right back on up, so. AMC, oh yeah, nice big bounce there on AMC. You said there was a Citron research, tweets, imagine if we could find a company with one of the most respected people in the world helping a real-world problem and doing it with unit economics. Nah, more fun to buy altcoins. So we got a nice little Citron article there, and like Jason said, a little bit of beast mode action on AMC. So let's look at the overall trend, right? Nice little breakout, little cup and handle. Nice break, pullback, break, pullback. Where's the pullback level, though, guys? That's what you got to identify is where do you think the stock could pull back before making its next leg up? You know, I'm a big fan of trend lines, so I would simply start by running a trend line here over on AMC. And just waiting for the stock to pull back to a level, right? Level of support, right? 9 EMA maybe. It's been respecting that 9 EMA since it broke out. If it cracks the 9 EMA, back down towards around the trend line. As far as resistance goes, you have room to 2087, right? Look at that low here from the 14th of December. Look at the low there from the 6th of January, right? So you can see that there's prior daily support, old support, new resistance. So that's going to be right around $20.74 here on AMC. I'm not a fan of APM anymore. I'm really not. APM's not looking all that good, guys. It's really not. SOFI straight beast mode above 15 bucks. I'm feeling good about that swing trade. I'm sure Corey's feeling good about those calls. BBIG never confirmed anything. I'm still personally not touching DWAC. Let's get SBEV off the watch list for now. Let's go ahead and take SBEV off the watch list. Again, it's not really doing a whole lot right now, Tim. And we're starting to see that slight reversal here on the Qs and the SPY. Is there anything that you guys are looking at you want me to look at? Right? I know I'm going back and forth, but again, for those of you trading the SPY and the Qs, I want to make sure I'm coming back to both of these and walking you through what's going on in real time so you can actively manage your position if you're currently in, or get some insight of a potential entry if you're looking to make an entry. So that's my job here, is to go through these stocks back and forth just to confirm, what we have at that point in time, just in case you guys are in a trade. You shouldn't be going back and forth, right? You guys shouldn't be back and forth, back and forth, back and forth, back and forth. You guys should be focused on that 1 or 2 or 3 stocks, getting to know these stocks, identifying your setups, right, and attacking. I'm going back and forth to just make sure that you guys are up to speed and up to date on what's currently going on and what's developing, to maybe help reinforce your trade, or reinforce your analysis to enter a trade. So in my honest opinion, Joel, I think your entry was a little too early. I think your entry was way too early on DATS, simply because we didn't have confirmation at 350, 360, 370. We didn't get confirmation for a short until 370. So I do think it was a little too soon. I don't know what your plan is. I know your position size. I don't know your account. I don't know what your risk tolerance is. I don't know any of those variables. I just know, looking at the chart, we didn't really get our confirmation until like that 370. And if we would have waited for the confirmation on DATS, we would actually be break even right now. But at one point, we'd have been up 15 cents a share. You had 6,000 shares. That would have been $1,000 of profit. So again, I do not know what your account value is. I don't know what your risk tolerance is. I don't know what your plan was. Where were you looking to cover? Where was your stop loss? But what I would say is, if you did what you were supposed to do, Joel, you built your plan, you were prepared, you assessed everything, you accepted your loss, just honor your plan. That's it. Don't let me steer you away from the plan that you built. If you built a plan, right? Honor that plan and work the trade that you got into. But just moving forward, future references, let's look back at this and use this as a learning lesson. Like, hey, I definitely feel like I got too early of an entry, right? And I see how I could have waited a little bit longer and got a better entry to where I'd only be down 3 cents right now, but I would have had a great opportunity to start locking in some profits at 10 to 15 cents to the downside. So as long as you can sit here and say, yes, Josh, listen, 3 A's, analyze, assess, accept. I built my plan. I knew my size in correlation with my account value, right? I accepted my loss. I accepted everything, right? I know my plan. Go ahead and honor that plan. You really don't want to see this breaking over 388, because over 388, that's going to drive some attention to this stock, right? Over 388 high a day, that's going to drive some interest back into DATS. And you could see it breaking 388 up to 4, right? And then you could see the $4 break up to 495. The last thing you want to be doing is holding a big position that high. So just go ahead and just do not get analysis paralysis, number one, right? Do not look at your P&L. Do not trade your P&L, number one, right? I know it's hard. You're probably looking at a P&L right now like, ugh, don't trade the P&L, right? Trade the chart. That's it. If you have to shut your P&L down, shut your P&L down. Trade the chart, look at your volume, watch the level 2, price action, right? We know what we don't want to see. We don't want to see a new high a day. Last time we got a new little high a day here, it shot straight on up, pulling back, right? Big U shape. It does look like it could break out, but let's see if it can roll back over for you. But yeah, I'd say over 388, it's very likely it goes to 4. Very likely it goes to 4, and I don't know if you can tolerate that much risk. Thoughts on Boeing. It has an inverse head and shoulders, but the market is still deciding where it wants to go. We read an article last week on Boeing that despite the overall markets, Boeing has a lot of things going for it, right? I can't remember exactly what the article said, but we were talking about, I think it was last Friday with Catherine in chat, and talking about Boeing. This is a tough one. This chart's a challenging one. It's very hard to read Boeing right now. It's very choppy over the past year. Always we're looking at the market. We're always looking at, okay, where do we think the SPY is going to be going to? Where do we think the Qs are going? Because sometimes with all that volatility and that movement in the market, that really dictates what some of these other stocks do, such as your Boeings, your Teslas, your Apples, everything like that. So when we look at Boeing, from a technical standpoint, it's pretty challenging to read this one, in my opinion. It was easy for the longest time last year, and we crushed the crap out of Boeing. But here on Friday, when we looked at it, we're like, man, this is a pretty challenging one to read. There was an article about how Boeing can still perform better than the overall market this year. in regards to something that China's doing that's going to help Boeing generate more revenue. Despite what the overall market does, Boeing can still thrive. There's been some analyst price targets that have been raised on Boeing, and there's a pretty good outlook for Boeing of 2022. You know, the consensus, right? The consensus between some of the most top-rated analysts out there, the consensus between them all is, you know, Boeing's going to have a green year, a positive year. I do see the inverse head and shoulders forming. I do see the double bottom on the daily chart. Really what gets me excited on Boeing is the stock actually trading above the 200-day moving average, like getting back above the 200-day and staying above the 200-day moving average. And they do have earnings coming on the 26th, which is going to be next Wednesday. So, I mean, that 200 SMA is a key level, and we can see it's been a pretty key level since September, right? And every time it comes up to the 200, it rejects. 200 SMA, it gets rejected. 200 SMA here just yesterday got rejected, right? We want to see Boeing getting above and holding above that 200-day moving average. So we actually hit the 200 SMA, right? So what's the 200 SMA at? 365. Look at this. Post market. 365. So yes, I know it hasn't hit it on the daily chart, but last night in post market, it went perfectly. Look, 365.54. The 200 SMA is 365.54. Is that a coincidence, guys? No, that's technical analysis, right? People see the 200 SMA as being a very strong level of support. What do? They buy at that level of support. It's no coincidence. It's not shocking that it came down to the freaking penny and shot up to 372. So I know what happened last night in post market. We have yet to see that on the daily, but we've already hit that 200 SMA. And that was a really good entry. And that's, why this is bouncing back up. So let's see if we can get that 200 SMA intraday. Yeah, I'm doing good on my SOFI position. I know Corey's over here just like, yeah, baby. It's like some Austin Powers. Oh, baby. I can't even do it. I'm just going to go to YouTube and play the Austin Powers theme song. That's for you, Corey. Yeah, baby. Yeah. $16 on SOFI, and then you're looking to go to the 50 SMA, and that is at 1644. Trim some, man. You're at 40%. Yeah, trim. Definitely trim, my man. Never a bad idea to take some profits and get paid. Leave what we call a moon bag, right? Leave yourself a nice little runner. Leave yourself a nice little moon bag, and you're all set, ready to rock. APM, it's not doing anything. BBIG right now, nothing. DWAC right now, again, I told you guys, I'm still convinced we have more room to the downside. I'm not touching it until we see it at at least 74. I think we could see 71.02. Right now, it's all SOFI. It's all SOFI. All right, you could have got that one pullback we were talking about at 1480, 1485, whoop, or the pullback into 15. Whoop. 2 entries back to back, right? Pullback into the prior high, bounced. Pullback into 15, bounced. There was 2 entries back to back there on SOFI. What's Roblox doing today? Right at 80. All right. So Roblox is still sitting right around the entry on Roblox. So that's the one thing I don't like about Fidelity is when it shows your percentage gain, like your P&L, it shows you based on the last close, not based on your cost basis, which is kind of annoying. That it shows it off of the prior close. Not off your actual cost basis. So I don't know if you can adjust that. But anytime I look up and I'm like, oh, Roblox, I'm in the green, and I look at the chart, I'm like, I'm not in the green on Roblox. I'm not in the green. I'm at break even. So still too early on the cup and handle. Wade, still too early for a cup and handle. This is your big U shape. This is your second touch of resistance. Okay, so let's go ahead and throw this up here. Boom. All right, you got resistance. So this would be your big U shape. and then you would want to see the handle, right? And then you would get that potential break to the upside. So I would say this is just the second point of resistance. Now, could it break? Yeah, it could break on out. It could be one big U-shaped breakout here. Wouldn't be a cup and handle. It would just be a big U-shaped breakout. For the cup and handle, you want to see that pullback, and then it actually break out on the third attempt. And we have yet to see that third attempt here over on DATS. That's funny. Ron over in Profit Chat, $1 million. What? That's it? 1 billion, cajillion, quadrillion. So, I mean, this is all momentum on SOFI. I mean, this is just all momentum, and you can see it's been grinding the 9. Look at the 9 EMA. Bounce, 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 right? You can see it bounce again. But at some point, you're going to see it shift, right? It's going to start losing some momentum, right? You can kind of see it losing a little bit of that momentum right here, just slightly. Look at your RSI. RSI is actually pulling back. Stock is still making higher highs. So you can actually see a possible reversal coming right here, right? You see that loss of buying momentum. You actually see more selling momentum moving in. You are topping out here as well, and you are taking some heat around that 9 EMA. So we may be due for a bigger pullback now here on SOFI. And where is the next best entry on SOFI? I would say like 1510. I would say off this breakout. This was a nice ascending triangle breakout on SOFI. So I would like to see this pull back down to that 1510, 1511. I think that would be the next best entry here on SOFI. SPY is still stuck under this downtrend team. So you can still see the SPY here currently stuck in this downtrend. If the SPY breaks the downtrend, you would want to exit a short position and possibly think about flipping long for a move higher. But again, we are still technically in this short-term downtrend there on the SPY. Same thing with the Qs, right? Actually, if I run my trend line correctly, we're actually still in this little bit of a downtrend as well. Yep, so just one big U-shaped breakout, right? So one big U-shaped breakout. So you have top resistance at high of day, high day resistance, right? That was the first time it hit that level, okay? Big U-shape, breakout, right? So not really a cup and handle, just one big U-shaped breakout, and it just followed through. But here's the beautiful thing. If you're like, man, I missed the entry. So it's okay. You're like, what? What do you mean it's okay? It's okay. What can you do? Stock broke 381. Resistance. Okay. Old resistance turns into what? Maybe new support. So it comes down and holds 380. Maybe you think about taking an entry on the retest for the next leg to the upside, right? So never get discouraged if you miss an entry. Don't get discouraged if you missed this, right? There's going to be another opportunity. There's going to be another setup. And what could that setup be? A break and retest. A break over resistance. Old resistance turns into new support, $3.80. That would be an area that you could start to get involved for that next U-shape break over $4 for the next leg up. Where does it have room to go to? I mean, believe it or not, guys, like $5 next. It has room to $5. There's not a lot of resistance on the daily chart here. There's not a lot of resistance here on the daily over 4. So, I mean, over $4, I mean, yeah, some of these upper shadows, right? Maybe like 430 take some profit, 473 take some profit, but the main level of resistance, the main level is 5 there on DATS. Looking for SOFI back down around that 1510, 1511 here. That would be a good little entry if we can see this bad boy set itself up. You got the SPY trying to get a little reversal here. Inverse head and shoulders break of the trend line. The SPY's trying to curl back onto the upside now. So let's see if this can hold on up. Make sure it's not like a little false move here. The Q's probably breaking too. Yep, the Q's breaking the trend line there as well. So right now, from the bearish side of the downtrend to the bullish side of the downtrend. Same thing with the SPY here. From the bearish side to the bullish side. Just looking to see if this is actually going to hold on up. Make sure it's not going to come cracking on back down here. So we're still waiting for SOFI back down at 15.10, 15.11. That's kind of where I want to get involved here on SOFI. Separate trade, separate opportunity, has nothing to do with the trade that I have at 14 bucks there over on SOFI. But I want to see if we can hold on up above that 15.10, 15.11. AMC had that initial hype on up, but then just completely given everything back right now. So there's definitely opportunity in the market, team, right? There's definitely opportunity, but it's definitely not in abundance of opportunity. The market's definitely not hot. It's not on fire. It's really, today's a game of patience, really being patient and waiting for the best of the best setup. And we've had a couple of them, but we're not seeing those big time moves, those big time $2, $3, $4 cracks and rips and runs. So, you know, there is opportunity, but in this market, what we've been seeing so far, it's a get in and get out, right? It's a get in. When you have some profit, take that profit really, really quick. All right, don't hold on too long because you're starting to see a lot of things, you know, reverse and move back on up. So get in, find your opportunity, take advantage of it, right? And then just lock in those profits quick. Last thing you want to do is be up 10, 20, 30%, and then within minutes, being back to break even. What would the exit be on SOFI? I would throw stops under 15. Now, because the way I look at it is if I get a 15-10 entry, what's my target? My target's high a day. What's high a day? Right around 1550. So I know coming into this trade, if I make an entry at that level of support at 1510, I know my target would be about 40 cents to the upside. So what's a 2-to-1 risk reward ratio? What is that? What is a 2-to-1 risk reward ratio? If I'm going to look to make 40 cents a share, it means I can't lose more than 20 cents a share. So technically speaking, I could even have stops at 14.90 and this still be a very good trade, right? Still be a very well planned out trade. Now you don't have to risk that 20 cents. You can risk 10 cents. What would that be, right? That would be a 4-to-1 risk reward ratio. So it really depends, right? Really depends on your plan and your risk tolerance. If you want to give it that 20 cents of breathing room, give it that 20 cents because your potential is 40 cents and that's at least a minimum of a 2-to-1 risk reward ratio. And as a new trader, as you're developing your edge and your strategy and building your playbook, every trade you take needs to have a minimum of a 2-to-1 risk reward ratio. So right now, team, it is what? It is 10:33 in the market. The only thing that we have right now at this point in time is what? You got DATS, right? DATS with the breakouts and the retest, 380. If you missed that breakout, you could be looking to get long for the retest. What's something else that's really nice about DATS? Not just the fact that it's retesting old 380 resistance as new support. You got this uptrend as well. And it's the third touch of the trend line. So right here around 380, give it a minute or so. Make sure it's going to hold on up. And if so, you have room back up towards around $4. Over $4. And your main level of resistance is 5. But you got a couple levels you got to take some profit at. I would say some of these spiking highs, like 425, 468, and then up towards around that $5 mark. Stops on DATS, 366. Cracking the trend line would be a stop out. Wade. Cracking the trend line, I'd be out. I wouldn't even give it breathing room. Like, that's just me. If I'm in off support and this trend line support, and we crack support, I'm out. I'm out. Right? I'm out. So if you were in at 380, right here, 377, 376, I'm out. 4 cents, walk away. Look for a better entry. I mean, it was a good entry. It was the retest. But we didn't see that solid confirmation, right? I said, give it another minute or so, right? I said, give it another minute. Really make sure that you get to see that bounce off the trend line and hold of support. It bounced, it cracked. So again, we knew coming into it, guys, that penny stocks would be a little hit or miss like they have been. We look at some of our top gainers today, and some of our top gainers from pre-market are actually, holding on up. DATS, APM. What's APM doing right now? APM moved a little bit, but nothing too crazy there. What about some of these prior day movers? GMDA. GMDA held above that 274, guys. Back above 3. This was a prior day mover that we were watching this morning. This one, slow creeper to the upside. GMVD. That one doesn't even look good for a mid candle tomorrow. That one doesn't look good at all. So what do you guys think? All right, what are we watching? What do you guys think has the best opportunity? Again, I want to make sure that everything that I say pertains to you guys inside of chat. So we watching the SPY, we watching the Qs, are we focused on SOFI? Is there anything else that's grabbing your attention? I think Beth just said FUBO. Yep, FUBO broke over high day for 1242. But yeah, today there's not like an abundance of opportunity. Colin, here's what I would do. If you're looking to get real-time data on TOS, here's exactly what I would do. I would just kind of fudge your story a little bit. Say, hey, I currently have my trading accounts with E-Trade, and I've heard great things about TOS. Really good things. But here's the thing. I don't want to bring all this money over, right? I don't just want to bring $500 over. If I come over the TOS, I want to bring everything over. And I don't want to transfer all this money from E-Trade to TOS just to realize I don't like it and have to transfer it back on out, right? That takes a lot of time. Okay. So what I'm asking is if you guys can give me real-time data on the account. Like, let me get in to the Thinkorswim account on a demo. Let me test it real time to see if it works. And if so, I would be more than happy to transfer my accounts from E-Trade over to TD. They'll go ahead and probably set you up with real-time data for a week. They'll say, we'll give it to you for a week. They forget to remove it. So they forget to remove it. So give that a shot and see if that works a little bit for you. Try that and tell them straight up. It's like, hey guys, I mean, I want to test the platform and I want to be able to actively trade real time to get my feet wet with your platform to see if I like it before I move over 100%, right? Like, I understand the real time data thing, but I don't want to bring all this money on over, right? And then realize I don't like it just to transfer it back out. That's like 2 weeks, guys. That's 2 weeks. That's insane. So yeah, if you guys like just a week, that's all I'm asking, a week or two, that gives me time to test the platform with real time data. And if I don't like it, I don't like it. If I do, then I'll bring it over to my live account and we're all set. But it would be really greatly appreciated if you guys can definitely set that demo account up with some real-time data just so I can get my feet wet, you know, and still see. You've been watching LAZR. Let's go check out LAZR. Something new. Maybe there's some opportunity over there. LAZR. Announced a partnership with Mercedes-Benz to accelerate the development of future highly automated driving technologies for Mercedes. That is really good news, isn't it? That's not bad at all. Yeah, don't do chat. Call him on the phone. Yeah, call him on the phone. Absolutely. Talk to a real human. Schmooth him a little bit. Sweet talk him. Just be nice and kind. And basically what I said, give that a shot. Again, years ago when I was demoing, I didn't want to demo 15 minutes delayed. So that's exactly what I did. But again, that was like 6 years ago, 7 years ago. So, I mean, times have changed a little bit. So it may be completely different. I just can't seem to touch anything right now. I'm looking across the board and I can't seem to get involved. I mean, there was a couple trades earlier today around 10 o'clock that were good on SOFI. Since then, I can't really gauge a really solid low risk entry, besides that 1511, which never was tagged. Looking at DATS, she's all over the place from bearish back to a nice breakout, failed breakout, moving back down below resistance. I mean, this thing's just all over the place. Can't seem to find direction and find any kind of consistency with DATS. I'm not touching this stock. AMC, quick pop on up, fading on back down. BBIG has yet to get back over that key level of resistance that we need to wait for. DWAC can't seem to find a sense of direction either. There's not a lot on my radar today, and that's the thing about trading. Some days you're gonna have like 30 things you're watching, it feels like, and it's like there's just opportunity left and right. There's gonna be some days like today you come in, it's like there's opportunity, but it's not like awesome opportunity. You're talking maybe 50 cents here on some options, maybe 10, 20 cents on a penny stock, but they start moving against you really, really quick, really quick. A lot of these penny stocks cannot seem to find a sense of direction, but I mean, overall, we've crushed a few, right? The SPY for the crack on down, the SPY for the break of the downtrend on up. There was a couple trades on the SPY, decent opportunity, not too shabby. Same thing with the Qs, the crack and the retest of the uptrend, cracking that neckline. It fell about $1. That's profit. Breaking the downtrend, right around 372. It's at 373. That's $1 to the upside. So, I mean, there's been a couple opportunities on the SPY for good trades, and they've worked out. Couple good opportunities on the Qs and the SPY, right? They've worked out pretty well. SOFI, a couple of these around 10 o'clock as well. But since then, I haven't really seen a whole lot. Exactly. I like that analogy. It's like fishing. Not much biting right now, right? Keep your lines out there and see if something comes by. If not, go back to the hole tomorrow and try again. Go back out to that fishing hole again the next day, cast your line, sit back, relax, be patient. And if you get a little nibble, start to try and reel that bad boy in a little bit. Just yank on that line a little bit. See if you got something. Get yourself a big old fish. So here in about 15 minutes, all right, team, about 15 minutes, we are going to be diving into our options lesson for the day. So right now for the next 15 minutes, we're sitting back, relaxed, looking to see if anything pops on up. If so, let's get prepared. If not, we're going to be patient. We're going to dive into a nice lesson, get you guys all educated, drop those value bombs the way we always do. Should be some fun. I'm excited for this lesson, guys. And then see if we have any opportunity maybe this afternoon, team. EVTL. What do we got, Angel? Look at that. We got a newer IPO stock getting some action, right? So over the last couple of weeks, we've seen, randomly, when the market's pretty dead with pennies, we get these recent IPO stocks that get some action. And that's all we're seeing right now on EVTL. And it has room to 1050. And you could see it up to 1050 if we actually get that solid break over 10 here. So you can see a little bit of a pullback here on EVTL. If it does pull back a little bit more, 967 to 972. Again, be careful with these stocks though, right? These newer IPOs, they randomly push on up because the market's pretty dead and traders are eager to get something going. And I would say 80% of the time we've seen these newer IPOs pop, they give a lot back, right? Go look at VINE, right? VINE, same thing. It would randomly pop when the market's dead with penny stocks, but it would give a lot back, right? It was a quick pop on up, bring traders in, and then slam on back down. So just make sure you're trading this smart, keeping those stops really nice and tight, locking in those profits when you have them. How far can SOFI go? 16's next on SOFI. And then here on SOFI, you're looking to go up towards around 1642. So $16.42 once we break 16, if we can break 16. But right now, your next target here is going to be 16 to 1606. Where would you look to short Roku or SPY if you were to short them? Well, let's go start with Roku because that was your first one. So the first thing I always try and, identify is, the trend. And obviously see the intraday trend is up. The trend is your friend. But if we have a trend that's just consistent, just building, push and pull, push and pull, push and pull, right? And you start to see that momentum dying on off, right? You have a lot of momentum to the upside. You start to see that momentum dying on off. And you get any kind of confirmation, whether that's some bearish divergence, double top, false breakouts, whatever the case is. That's when we would be looking to short against the trend for that trend reversal. But this thing's been pretty clean and solid as far as the movement, right? Nice third touch break on up, right? Nice pullback, finding some good support. Something like Roku, I probably wouldn't short it. And here's why. I want to give you a little bit of an example real quick on what I'm talking about. So when you just have that really strong momentum-based trend, right, something like this, and you start to see that divergence set in and those double tops, that's when I would short against the trend, right? Because you can see those nice big reversals. When you have just a solid uptrend, all this momentum, just really grinding to the upside. Kind of if you go back and look at like DATS, right? Just really solid, quick grind to the upside. But when we look at something like, Roku, the thing is taking a good amount of time. It's actually moving pretty steady, right? It's finding some good support for a good amount of time and it's moving on up. So a stock like this that's trending, I wouldn't personally look to short a stock like this because it's building good structure, right? It's building good support, right? It's consolidating for a good amount of time before it gets that next leg up. It's consolidating for a good amount of time before it gets that next leg up, right? So a stock like that that's moving like this, I wouldn't really be looking to short against the trend quickly, like double tops and stuff like that, versus a stock that's just straight grinding to the upside, like kind of what we saw with DATS. So number one, I just see how it's building before the breakout, right? It's building, it's consolidating before that nice big breakout, right? Right here, it's building great support, building really nice structure and good support before it potentially breaks out again and puts in a new high a day. So, to keep it simple on something like Roku, right? Not looking for any kind of like divergences, not looking for any kind of double tops, to keep it very, very simple, put yourself a nice little trend line on the stock, right? Put yourself a nice little uptrend. And if you ever start to see something like this, right? Got that nice little uptrend grinding on up. It's building very nice, right? Building some great support. Moving back higher, you got second point of the trend line, right? That's point number one down there, point number two, and you see it build and break out, and it's doing really nice. But if you ever see something like this, to where it's coming down into the fourth point, the fifth point of the trend line, and you see it's kind of topping out here a little bit, right? It's topping out, and you've already had 1 point, 2 point, 3 point, 4 point of the trend line. I would just look for a crack of the trend line, right? And that's when you could actually see that bigger time reversal. So that's what I would do on something like Roku, is I would just draw the trend line and wait for a crack of the trend line. But I would actually want to see a lower high before the crack of the trend line, if that makes sense. Because if the stock continues to put in a higher high, higher low, higher high, higher low, higher high, higher low, I would not want to short this because it's in a very strong uptrend. But if you ever see any kind of weakness, right, to where it's actually coming into the trend line, okay, maybe something like this off of a lower high, right, after point number three, let's say hypothetically point number four, off of that lower high, that's when I'd be looking to short the crack of the uptrend and actually look to see the start to form a slight downtrend. So again, we're still talking 30 minutes of development, an hour of development. This may not even happen. But right when I look at this stock on Roku, I see that it's building very nice. It's building some structure. It's building some strength. It's consolidating before it breaks. Building some structure, building some strength. It's consolidating before it gets that leg on up, right? Go look at something like DATS, where it's push, pull, push, pull, push, pull, right? It's quick. It's pretty fast, right? It's a push, pull, push, pull, push, pull. That's when I'm looking for those quick double tops, those levels of divergence, trend line cracks as well, for those big time shorts, for those big time cracks, for those big time potential dumps. So these are going to be more of like those quick shorts off of those, like, again, double tops, the divergences, the cracks of the trend lines, those quick initial big dumps on down. But something like Roku would be a more slow and steady approach based on the way it's been moving today. And you would just be looking for a simple, slow, steady reversal from uptrend to downtrend. All right, BBIG's back above 410, guys. Remember, wait, be patient. Back above 410, what's significant about 410? Well, it's the 200 SMA right there around 411, and you are above the gap fill level at 407. So in between 407 to 411, that 4-cent window, okay, that would be a good area to see BBIG stay above for the retest and see those buyers move back in, right, to get this going once again. Where could we see BBIG go? Well, retest high a day. Where's high a day? $4.37. So right now, we do not want to see it dropping and closing back below 407 to 411. That is our new level of support. Old resistance, new support. It's also above the 200 SMA, right? We are now on the bullish side of the 200 SMA. So as long as we hold those two levels, you have room to high of day, which is $4.37 here on BBIG. Where could it go after that? Yesterday's close. That's going to be a level of resistance right around $4.53 there on BBIG. So yeah, $15.99 on SOFI. I think I want to take a little bit of profit here, guys. Like, I've been in this since 14. I'm up $2 a share now here on SOFI, but I haven't seen any kind of like trend reversal yet. I mean, it's still very solid to the upside. So until I see this actually start to reverse in its trend, right, I'm still holding this to the long side. I know we're right at that $16 level, but until I see something that says, hey, we're done going to the upside, right? We are going to start really pulling back and actually forming a solid downtrend. I'm still holding this one as there's a lot of momentum behind it. There's a lot of activity, and it's very solid to the upside. So I'm still being patient with this, looking to see if maybe we get that 1606 breakout up to 1645. But if we ever start to see, okay, this is a reversal, right? It's really clear. This looks like it's going to reverse. That's when I start closing out my position. No chasing in here. Jason, no chasing in here, man. I know it's tempting because it's very strong and consistent to the upside, but you know, if we miss that trade back down off that retest of like that 1481 level, right? We missed it. We had another opportunity as well. What was the other opportunity? It was that retest, and it was the 15. It was 15, right? So we had that initial pullback and retest of prior resistance right there at like 1480. And then we had that second opportunity above 15. Ever since then, I'm gonna be honest, it's really easy to see things in hindsight, right? After it's developed and you go back, oh, I would have bought it here, I would have bought it there. To be completely honest with you, since 1010, I haven't seen another entry on SOFI. I really haven't. As far as like a really clean, solid entry, I have not seen one. So yeah, I know we'll have the trade that'll come, Jason, right? We know that the trade will come. It could come at 2, 3. Hey, maybe it doesn't come today, Jason. Maybe it comes tomorrow, right? Maybe it comes next week. But as long as we sit back, be patient, sit on those hands and not chase stocks, not FOMO in, patience, right? We'll find another SOFI, right? We'll find another stock that does just this, and we'll be better prepared to take advantage of it, to execute it, and we'll make that big time profit, right? So let's not give back any profits. Let's not take any kind of unnecessary loss, because this thing has already moved substantially today. $2 to the upside, right? We hit 14, we're at $16. Coming into a couple key levels of resistance. If anything, let's think about a short. Let's see if a short opportunity sets up, right? We're coming into the 50 SMA. We're coming into a lot of daily resistance. Let's see if it sets up for a possible short and potentially capitalize on it to the short side. So yeah, I mean, we're still good on SOFI. So here's what I'm going to do, guys, is below 1575, I get out. You know, below 1575, I get out. So I'm going to go put a stop in real quick, guys. I'm going to go ahead and put a stop loss in real quick here on SOFI. I mean, I don't know how to put stops in on Fidelity. Again, I'm just testing it. So I would assume I would go to my position. I would right click it. I would go to sell. I would go to stop. Stop, we would do 15.74. SOFI, sell, share, stop, 14 or 15. Yep, 1574. Time and force day, preview, and we got a sell, stop, 1574, and place. And we're open. All right, cool. Let's see. Yeah, cool. We got a stop loss in at 1574. And my entry was down there at 1403. So we're looking at $1.70 a share. So that's not bad. Go ahead and get that hard stop in there. Can you explain hard to borrow again? Can you explain hard to borrow? So yeah, it just means that they're hard to borrow. That means there's not an abundance of shorts out there for you to borrow to sell the market short, right? So it's just hard to borrow. It's hard to locate those. So they're going to basically just charge you a higher locate fee. So you have 3. You have easy to borrow, you have nothing to borrow, and you have hard to borrow. Easy to borrow, that means there's an abundance of shares out there that they can get for you, and you can short it. It's a very small fee, right? That's easy to borrow. Nothing to borrow is, yeah, we're not going to let you short it, period. There's none to borrow. No, I don't even care if there's anything. You're not borrowing anything. That's none to borrow, right? Not going to happen. Best of luck next time. Hard to borrow means, hey, we can get those shares, but it's going to be a little bit difficult for us to get those shares for you. So we're going to charge you a little bit more money because it's a little bit more difficult to get those. So it means you can borrow them, right? It's hard to borrow. Not nothing, but hard. Sometimes they may come back and say, we can't do it. But most of the time, they'll say yes, but it may be expensive. I've seen shorts as high as $1 a share before. I'm like, whoa, $1 a share just to short? That means I have to get $1 a share just to break even. It's nuts. How many shares? 1 million. I took 1 million shares of it. No, I'm joking. It's the Fidelity account. I'm testing the platform. I'm getting my feet wet with it. I only scooped up like 100 shares. That's it. Because again, I'm not familiar with the platform. Like I've only been using it for about 3 days now. So until I get really comfortable with it, I'm doing small size. So yeah, I did like 100 shares of it. I mean, I'll pull it over real quick. I trust you guys. So here's everything that I have right now. So, I mean, you can see 242 on SoFi, 116 on Roblox, 53 on Upstart, yada yada. I'm down 154, but I'm up 290 on the trades that have been taken over the last couple of days. Some swings, some day trades, but yeah, I only took 100 shares of SOFI. Just getting my feet wet. And this thing's still ripping. This thing's doing great. So, I mean, guys, what do you want to do? Do you want to wait a little bit longer for the lesson, or you guys still want to manage this SOFI? I got to bring my stop up a little bit here. Yeah, I got to bring my stop up a little bit. I'm gonna trail this. So right now I got a stop in here on SOFI, and I'm gonna replace it. All right, I'm gonna come here and go a $16, 16 even. Okay, I'm gonna preview that, and now we're just swapping it out. We're gonna sell. Stop at 16, and we're going to replace that order from 15.74 to 16 bucks. So that one was verified canceled. We have an open stop at $16 now on SOFI. So we're going to grab just right at $2 a share over the last couple of days. That's all I'm going to do. Every 25 cents, I trail my stop. And I'm going to do that. Eventually, I get stopped out. But if this stock is going to keep just squeezing, 17, 18, you never know. I'm just going to keep trailing my stop every 25 to 30-ish cents. Anytime we break into a new high, I'll just trail it 30 cents higher. New high, I'll trail it a little bit more. And eventually, I will get stopped out. And I want to take profit. But this is me managing the trade. I'm not just going to sell it right here, but I'm going to run a very tight stop loss. So, I mean, the only thing I'm giving back right now is 25 cents. All right, 25 cents is 25 bucks. But what if I get another dollar to the upside? Is it worth the 25 cents of risk to leave a little bit of a runner here, right? And continue to, like, just do a trailing stop loss? I think so. Absolutely. Oh, it's working now on SOFI. Cool. So it shows I have the 100 shares, 1403. It's at 1637, and it shows that I have a 234 P&L. So, okay, that's accurate. So quantity, purchase price, the last, and then the GL. Gross gain loss, yeah. So still running a tight stop, and I think this may be the reversal point, guys. This may be the reversal right at the 50 SMA. This may be the point that we really start heavily pulling back. I still got the hard stop at 16 bucks. But yeah, this is looking like, look at that high day on red. Big volume. Look at that volume bar right there. That was the biggest volume bar we've seen. And it was a red candle at a high a day. That right there is a signal of reversal. I think we may start to see a reversal coming on up. So did the same SOFI management too, scaling out, rolled my calls out another month, but a strike up a bit, secured 340 profit. Good job, Corey. Great work there, buddy. Great work. Nice little multi-day trade. Could DATS be setting up for a boom, boom, bang? Man, I haven't heard boom, boom, bang in a long time, guys. I haven't heard you guys say boom, boom, bang in a while. I love it. Ow! Boom, boom, bang, baby. Let's see what we got here. Downtrend off the high. So if this is the third point, support, it could be. It very well could be. Because what's a boom, boom, bang, right? We got point number one, downtrend. Point number two, downtrend. Point number three, right? After point three, we do not want to see it lose that prior low, which is 360. So if we hit point number three, As long as we don't drop below 360 and we break the downtrend, absolutely, it could be a boom, boom, bang. And we can see here that it was decent resistance here this morning, right? We had some resistance at 360. So yeah, absolutely. Good eye there. Definitely looking like it could be a little bit of a boom, boom, bangarang. You guys just want to keep looking at SoFi and push the lesson a little bit. Maybe push the lesson out another 20-ish minutes and just keep looking at SOFI and manage this trade and see if it sets up for a possible short. Maybe you want to grab some puts, right? Maybe you want to grab some short-term puts for a little bit of a reversal. Let's throw this on a 5-minute and let's see, right? I'm seeing that we could come back down towards around 1540, 1550, right? Nice big push. I mean, that's the point of control. That's the VWAP, right? We're definitely seeing the reversal take place, even on the 5-minute chart. Look at that, guys. Look at that potential 5-minute candle that would be closing here with a very strong volume bar. I definitely think we start to see a much bigger pullback, not just these small pullbacks, but a much bigger pullback, going from a solid uptrend into a downtrend. You know, definitely thinking back down towards around 1543 to 1550. I mean, that's about 50 to 60 cents more to the downside there on SOFI. DWAC is getting some action here, guys. Here's the thing on DWAC. Remember yesterday, 83 was really tough. 83 was such a tough level to get above. Here intraday, we're above 83, so I think it's worth watching DWAC here above 83, just to see if it can stay above. If not, don't touch it. Don't touch it. Wait for the confirmation. Be patient with DWAC. Don't just jump in here, because it could go whoop, cracking on back down. But if you hold 83 and you see it pushing back above 84, you could take it for a quick scalp back up to 86, right? Grab $1 or $2 out of it, but just wait. Be patient with DWAC. BBIG just lost that attention. BBIG, you know, it's still above that 407 level, but it's not really getting that consistent movement that we'd really want to see. And plus, we're coming into lunch hours, guys, so things are really going to start slowing on down. So, and did I get stopped out there? And filled at 16. Very cool. I mean, good fills. I'm actually not upset. Pretty decent fills with Fidelity so far, guys. So, you know, again, you know, I've traded, day traded on TD, Webull, a lot of brokers, E-Trade, just to get an idea of which one's the best. And so far, Fidelity is not bad. The fills are good. I mean, don't get me wrong, the platform is a little off. It's different to me. It's just something to get used to. But so far, from an execution standpoint, team, Fidelity's not bad whatsoever. So what was the final P&L there over on SOFI? So it looks like SOFI was $228. So not bad for a couple of days on a small $100. Getting my feet wet there. Just no VWAP. So yeah, TD Ameritrade for the charts. Absolutely. TD Ameritrade for charting, 100%. But yeah, as far as like entries, like I could see myself day trading with Fidelity. Believe it or not, I could see myself, you know, actively day trading with Fidelity. And I never thought I would say that because I've been so stuck on like Lightspeed for how long, guys? How long? Long time. At least a few years now. So, but right now I'm actually not disappointed with Fidelity. I'm actually pretty impressed. And I haven't been impressed with a broker in a really long time. Like TD, not impressed. Interactive Brokers, not impressed. E-Trade, not impressed. Webull, not impressed. I'm actually kind of impressed with Fidelity, so you may see me trading more Fidelity, guys. I need to set it up better, right? That's it. I just need to set it up better. Dougie, out at 1365. Oh, man, you got high a day, dude. Look at that. 1635. Out. Woo! That's what I'm talking about. Let's get it. All I need to do now is figure out, like, my intraday P&L. So, Angel, is there a setting to only show what your intraday P&L is? Like the trade, the entry, the exit? Because, like, right now, it's all weird. I got to really take some time to learn it and set it up. But is there, like, a setting to where it just shows what your intraday P&L is versus what's kind of still open? But yeah, good job, Doug. That's what I'm talking about. Dougie! Let's go. I have zero complaints so far on the fills. Zero complaints. Again, like I said, I'm actually pretty impressed with Fidelity. Gotcha. You go to all the orders and it shows all the orders. Yeah. So, but I pulled it over there. I was in at 1403. I told you guys to pick that up Tuesday and post market when I saw the news. It was like at 14 bucks. So I grabbed it 100 shares at 1403 and we just got stopped out at 16. So we'll do the math there. It was almost $2 a share. Almost, not quite. It was $1.50 something. So it was like $190 some dollar, 197 bucks. No commissions and fees, which is nice. Nice fills. Clean execution, very fast as well. And here's something else I've noticed too, is that whole best price thing they do. I'm impressed with that as well. Because before, Angel, I thought that it was taking 5 to 10 seconds to get a fill, but you said open up your orders tab. And so all accounts and orders. And so I opened that up and you see it get filled right away. And the fills have been quick, they've been clean, and sometimes I'm getting a better fill than the ask. Like, I'll see that there's like a 10-cent spread, and I'm getting filled closer to the bid than I'm getting filled closer to the ask, which is really nice as well. So so far, guys, if you guys are like, how do you like Fidelity? I like it. You know, Fidelity, it's not bad at all. I'm actually enjoying it, guys. So if you guys are looking to branch out from, maybe TD or, Webull, and you're having issues, then yeah, I mean, Fidelity's a great option. So far, no complaints. Let's petition for the VWAP. Like, what are you guys doing? Come on now. What are we doing here, man? Like, you're a mainstream broker, new technology. Put the VWAP on there, guys. Come on now. Like, what we got going on here? What's going on? Wow, Upstart was a good buy. I forgot I bought some Upstart for a long term, UPST. Upstart's bounced a nice little bit. What was my cost basis there? 109.93. We're up about $5 a share there on Upstart. That's not bad. A nice little longer term ad. We got some Roblox at break even as well. We got some DraftKings at break even. So, but it's cool. Upstart's not doing too bad. I'm going to keep accumulating some Upstart. I like Upstart long term, and I told you guys this, I think last week, is like, what am I doing with a lot of these stocks that I like that I feel like ran up way too quick, way too fast? Upstart, Netflix, Zoom. Like, I like these companies. I want to own them. I'm going to own them at $400, $355. Like, I'm not going to do that. What am I doing? I'm waiting for these stocks to come back down to pre-pandemic levels. Right? Upstart's not one of them because this was a newer IPO. But that's kind of what I'm doing is, like Netflix, when I look at that, when I look at like Zoom, again, these stay-at-home stocks, right, that ran up way too quick, way too fast because of the pandemic. I'm just waiting for them to come back down to these levels. And that's why I want to buy some Roku today. Right? I'm going to get some Roku. And the reason for that is I like Roku long-term. I think Roku's a great company. I don't think I want to buy it at $490, $450, $400, right? I want to be buying it right here, right? $150-ish. We're at $176. I mean, we're close enough. I can start definitely building a position here on Roku. 100%. So Angel, Roku. So you see how we kind of like topped out here at resistance? And you see the second we cracked the trend line? That would have been a short, right? We had the uptrend. We topped out at resistance. We can see point number 1, point number 2, point number 3. And then we come up here, right here, lower high, very quick, very fast, right? Come down, bounce, lower high, solid crack of the trend line. Boom, short. You see that? Boom, short. Take it short on down. So you can see that real time as it played out. And you're like, okay, I can kind of see how I'd get involved. You could have been faked into it here, right? You could have been faked in and brought in early on the short. But when I short trend lines, what do? I put my stop over the prior high. So if I'm going to short the crack of the trend line, my stops go over the prior high. So even if you got in here, would have taken a little bit of heat, but you would have been able to capitalize on that trade. If it would have came down and put you in the trade short, it could have squeezed you out, but your stop's really tight over that prior high. Never made it over the prior high, came back down. Nice, what is that, $3 fade. About a $3 fade to the downside. So not bad at all. I have tried Street Smart Edge, Schwab. It's okay. It's all right. There's your boom, boom, bang. Who called the boom, boom, bang out? Can't remember, but yeah, you had a perfect analysis on it. It was Tim, the boom, boom, bang. I mean, you got it. You got the double bottom. You got the break of the downtrend. That was a quick 10-cent pop, right? You're like, well, I want more. This market, I wouldn't be greedy for 50 cents a dollar, you know, especially a penny stock like the ATS. I'd be looking to get those quick, in and outs, right? Quick 10 cents, 10 cents, 10 cents. Low risk, nice reward, 10 cents. But good job. That was clean. That was actually very clean. Looking at it, the boom, boom, bang, the downtrend break. Hey, that's what I'm talking about. He got in and he got out. Good job. Take that quick 5 to 10 cents of profit. Base hits, especially in a market that's inconsistent. So I like the approach, man. Way to get in, way to execute, way to have a plan. Great analysis. Fantastic. And main level, I'm saying like 1543 to 1550 there on SOFI is what I would think. Back down towards around 1550 to 1540-ish. Let's run a fib here. Let's go low a day, and then let's run this up to high a day. And that does support our thesis of the pullback into these 38.2 fib, right? Into the 38.2 fib would put you at 1550. So you have that point of control right around 1540. Prior resistance where you broke out, 1550, right? 1550 is a psychological level. And you have the 38.2 retracement right there as well. So from low a day to high a day, the 38.2 fib is at 1548. Prior resistance, prior breakout level, right there around 1550 as well. And by time this makes it down to 1550, right, the VWAP could be right there as well. So I still think 1550 is one of your main levels, right? Main levels to start, getting out of that short position if you are in. So how's the overall market? So in about 9 minutes, we're going to dive into a lesson. I got to use the restroom first. I'm over here like jumping up and down, but I've never put a stop on a short before. So again, I'm short Home Depot. I've been short on Home Depot for a very long time. And I'm just looking for this to crack on down, but it's sideways today. So I don't know if that's going to happen. And I don't know how to do a stop to the short side. I'm sure it's just buy to cover and the price. So let me go ahead and get a stop in and see if it works. So let's go HD. We're going to buy to cover the quantity. We're going to go stop. Our stop price obviously needs to be above the current ask, right? So we're going to go let's just go 361. 361. Day, none. Let's go ahead and preview this. So Home Depot, we're going to buy to cover, right? Because I'm short, so I want to buy it. It's a little bit different than Lightspeed, right? We're going to buy to cover that position, 100 shares. It's going to be a stop order at 361. And that's the only reason I don't want to put a stop in, because the spread. That's another reason, is the spread. Like the ask could literally jump up and I can get filled on the stop. The spread's like 50 cents to $1 a time. So I'm just going to do it. If I take a loss, take a loss. I'm just curious. So let's go ahead and place that in there. Order received, HD, open, stop loss, 361. And that's a buy to cover stop at 361. Perfect. So let's do this. I got to go use the restroom. All right. Try and wake up a little bit more. As you guys know, I'm running on low sleep today, and I'm really starting to feel it now here this afternoon. But I want to dive into this lesson. I want to hit it hard, guys. I want to have some fun and drop those value bombs. All right. So I'm going to use the restroom real quick, take a quick break. Let's be back here right around 11:30. as we dive into our options lesson. Get ready, team. We're going to hit it hard. Let's have some fun. Let's make it happen. All right, ladies and gentlemen, it's that time. We're going to be diving into our highly anticipated lesson. And once again, that lesson today is going to be on options. And the way I went about this, guys, is there's a lot to know about options. A lot of it's boring. A lot of it may not pertain to you as day traders, as swing traders, but it's very important to get a solid foundation of knowledge, to know just enough about options, not just enough, but know a good amount about options, even if that knowledge and even if that doesn't really pertain to you and how you're going to go about your options trading. So again, I want to break this down into 3 parts, 3 little mini series, and we're gonna have a part 1 today. You could say it's the boring stuff, maybe it's the stuff that doesn't pertain to you, but maybe it does. And this is all great, valuable information that's going to help you become a better trader in the future as you learn new strategies and things of that nature. So, and then next week, what we're going to do is actually break down day trading options and strategies. And don't get me wrong, we're definitely going to talk about that today. We're going to be a lot more thorough with it next week. And actually, the entire lesson is going to solely pertain to day trading options and some strategies. But first, we have to understand the basics, the fundamentals, things of that nature, so you even know what an option is and how it works and how they move before we can even progress into actually day trading these options and then the strategies behind them. And then I want to bring on a guest speaker next week or the week after. I would love to do that, and if I can make that happen, I will, to talk about swing trading options and some more advanced strategies as well. We've heard of the terms diagonal roll, right? We've heard of iron condors, things of that. That is not my field of expertise, as you guys know. So I'd rather bring on the expert, and if I can bring that expert on and have them host a nice little mini series with us inside a chat, I definitely want to do that. So just keep in mind today, round 1, day 1, options. Next week, we're going to roll into part 2 and part 3 of options trading as well. So let's not waste any time, guys. Let's go ahead and dive into today's lesson once again on options. All right, so let's go ahead and get started. Options. What are options and how do we trade them? Well, first things first, we need to understand what an option is. Like, what is this option that I've been hearing about, right? What is this beautiful word I want to learn so much about? So options are derivatives. The value is derived from the performance of an underlying asset, a stock. So what does the word derived mean, right? It means obtained from something. An option's value is obtained from the performance of the stock, okay? But the actual definition is options are derivatives, right? You have option derivatives, you have futures contracts, those are considered derivatives as well. And the value of that option contract, right, is derived, it's obtained from the performance of an underlying asset. And that underlying asset, for the purpose of this lesson, is going to be stocks, Facebook, right, Netflix, Lowe's, Tesla. So depending on what Tesla's doing, that's how the value is going to be given to that option, okay? So an option gives you the right, but not the obligation to buy or sell the underlying stock at a specific price, aka the strike, on or before a certain date, the expiration. So as an option holder, you have the right, okay, the right, but not the obligation. You're not obligated to buy or sell the underlying stock at that specific price. And that specific price would be the strike price, okay, on or before a certain date, which is the expiration date, okay? So again, you're not obligated to buy or sell the stock, the shares, right? But you have the right to do so if you wish. A stock option represents 100 shares of the underlying stock. So for example, an option could cost $1, right? You see it there on your ladder, your options ladder. It'll show maybe $1. But remember, the option represents 100 shares. So the total cost of that option would be $1 times those 100 shares, because remember, the option is representing 100 shares of that particular stock. So that would cost you $100. The easiest way for me to just look and see what the price is I remove the decimal, right? That's it, right? So $1 is the contract. So I'm going to go in $1 times 100 to get $100. Just remove the decimal. It's 100, right? If it's $2.25, you don't have to go $2.25 times 100 to know that it's $225. Simply remove the decimal. Okay, so that's what an option is. They're derivatives. Their value comes from the performance of that particular stock. As an owner of an option, you have the right, but you're not obligated, to buy or sell the underlying stock at a specific price on or before a certain date. And each option contract represents 100 shares of the underlying stock. So why do options even exist in the first place, right? I've had this question a lot. I ask this question a lot as a newer trader. Like, okay, I get the option. I understand what an option is, but what's the point of an option? Like, why do they even exist in the first place? Like, why were they created, right? So there are many reasons as to why options exist. But I was taught to think this way. And the easiest way to think about an option is like insurance. So Matt, you know Matt, he's inside a chat. Well, he used to be. His job picked up a lot. When he explained options to me and really broke this down, he said, think about options like car insurance, like health insurance. Just think about an option like insurance. I'm like, what? He goes, let me explain. So let me go ahead and explain. So if you buy 100 shares of ABC stock at $100, you would pay $10,000. That would be your total investment. 100 shares of ABC stock at $100 per share. Your total investment would be $10,000, correct? We all know that there's risks associated with trading stocks. And technically speaking, our total risk on that particular trade could be our total investment of $10,000 if the stock goes to zero. Okay, not saying we're going to hold it that long, but there is that risk associated with actually trading those stocks. And our total risk could be our entire investment. So, since we're thinking of options as insurance, we could actually buy a put option, okay, of ABC stock for, let's say, $500 for 30 days of coverage, right? So we're having the mindset right now. Just shift your mind a little bit as insurance. So let's say you bought 100 shares of Tesla, okay? You bought 100 shares of Tesla, and let's say Tesla was $100. You invested $10,000 into Tesla, but you want to buy insurance, an insurance policy, right? To protect your investment, to protect your 100 shares of Tesla at $100. So you're going to go out there and you're going to buy an insurance policy. And that insurance policy is going to be in the form of a put option on, say, Tesla. And that is going to cost you a premium, right? Because remember, insurance is a premium that you pay of, let's say, a $500 premium for 30 days of insurance coverage. And you're going to go ahead and buy that coverage, okay, for $500. It's 30 days valid. It expires in 30 days. And you're going to protect it at the price that you paid for Tesla, $100. So again, okay, we got to think of options as insurance. So we could buy that put option on Tesla for, let's say, $500. That would give you 30 days of coverage. And you're going to buy that policy, right? That policy is going to be for $100 a share because that's what you bought Tesla at, which would be a $100 strike, okay? If that stock's value were to go down to, let's say, $80, okay, your 100 shares of ABC stock, and again, this example, we're using Tesla, that was purchased at $100 per share, is now only worth $8,000. That would be a $10,000 loss, right? You invested $10,000 because you bought 100 shares at $100, but now Tesla drops to say 80 bucks. So now your 100 shares of Tesla is not worth $10,000. It's worth $8,000. At that point in time, you would have an unrealized loss of $2,000. But if you bought a put option, AKA that insurance policy, that gives you the rights, but not the obligation. Remember, you're not obligated, but you have the right to sell shares at a specific price on or before a certain date. This would be called exercising your option. Okay, so that's what the term comes from, exercising your option. If you choose to sell those shares at a specific price on or before a certain date, which is your expiration, you would be exercising that options contract. Okay, that's your right, but you're not obligated to do that. You would be able to sell your shares to the options writer, whoever wrote that options contract. You would be able to sell those shares to the options writer at $100, even though the stock's current price is $80. They wrote that options contract. They wrote that insurance premium. They didn't think Tesla was going to go low, right? So they said, you know what? I'm going to write this insurance premium because I don't think it's going to go below $100, right? So they wrote it. You bought it from them for $500 and you have that 30 days of coverage. So again, you'd be able to sell your shares to the options writer at $100, okay? Even though the stock's current price is $80. So they're taking the loss there, right? They're going to have to buy your shares at $100, right? But it's only worth $80. That sucks for them, but it's good for you. You would lose nothing on the stock. You would lose nothing on the stock, right? But you would forfeit that $500 premium you paid for the option, which is your insurance. And would only be down $500 versus $2,000. So before we move on, I know that's a lot to sink in. I know that's a lot to digest, but does that make sense? Thinking about options as an insurance policy, okay? And if you think about it as an insurance policy, what are you doing? You're buying insurance to protect, right, yourself, your car, your asset, right? I consider myself an asset. Life insurance, right? My car is an asset. Well, not really, but you get it, an asset. You buy insurance to protect that. Your home is an asset. You buy homeowners insurance to protect the asset. So options were really created to be protection as like insurance, okay? And so again, I just want to make sure you guys understand before we move on to the next slide, okay? So we're thinking about options as insurance. And based on this example, you have a $10,000 investment of Tesla, right? 100 shares at $100. If you do not do anything and you do not buy insurance, right? And it drops to $80, that means you're down $2,000, right? We know that. Pretty easy stuff. But now let's apply the fact that we're going to buy a put, which is our insurance policy. And so basically what that allows us to do is exercise it. It allows us, right, to sell those shares for $100. That's what we paid for them. We paid $100 for them. Tesla's worth 80. But the fact that we bought insurance, we could sell those shares to the insurance company, the option writer, okay, for the $100. Where are we getting the $100 for? It was a $100 strike, okay, so for $100. So even though the stock is only worth $80, they have to buy those shares from you. That's the agreement they made with you. That's the agreement. They have to buy those 100 shares from you for $100 because that's the strike, because that's the agreement they made with you, but you have to exercise your right to do so. So again, instead of losing $2,000, right, you're breaking even on the stock. You paid $100 a share. You're selling them to the option writer, right, for $100 a share, but you're going to forfeit that $500 premium. So what's better on this example, right? Having a $10,000 investment on Tesla and potentially being down $2,000, or investing $10,000 in Tesla plus an additional $500 of insurance. And on this scenario, you wouldn't be down $2,000. You'd only be down $500, right? That's a $1,500 difference. If that's the case, let me buy some insurance on my positions, on my investments. And that was the main reason why options were really created in the first place, right? As an insurance policy, as protection. Now, yes, there's more, right? There's more reasons as to why options exist, but the way it was described to me and explained to me is it was like an insurance policy, right? So let's go ahead and move on. Types of options, okay? So we know what options are, derivatives, right? We know what they are. We know what they allow us to do, the right and the obligation, and we know that they're based on 100 shares. And we know that we need to think about options like an insurance policy. So what are the different types of options? Well, you have calls and you have puts. So a call gives the options holder the rights, but not the obligation, to buy shares of a stock at an agreed upon price. Now that is your strike, on or before a particular date. That is your expiration. So an example, let's say you buy a call option that has a $150 strike and a 30-day expiration. By owning this call, you would be able to purchase shares of the stock for $150 at any point in time within the next 30 days, regardless of where the current price is, because that's your right, ladies and gentlemen. If you are the owner of a call option that has a $150 strike and 30 days until expiration, you have the right to purchase those shares, those 100 shares of that stock for $150 at any time within the next 30 days, regardless of where the current price is. You're not obligated to do that, but you have the right to do that. So why would you want to do that, right? So let's say you have a call option. It's in a 150 strike, 30 days till expiration. Let's say the next day, the stock's price is at 200. You're like, wow, that went up quick. It's worth $200 now, right? But I hold this call option, ooh, buddy, right? So I can choose to buy those 100 shares for $150 because I own that call option and I'm way before my expiration date. So that's the beauty of options in this scenario. And it's the complete opposite with puts. So the puts give the options holder the rights, right, but not the obligation to sell shares of a stock at an agreed upon price. Again, that's your strike on or before a particular date. So let's say you buy a put option that has a $150 strike and a 30-day expiration. By owning this put option, you would be able to sell shares of the stock for $150 at any point in time within the next 30 days, regardless of where the current price is. That's pretty cool, huh? I think that's pretty cool. I like that. This is cool because if you own that call option and the stock's price goes to $200 a share the next day, you can go back and buy those 100 shares for that $150 strike price, and then simply turn around and sell them to the market for $200. And it's the complete opposite for puts. So in that scenario, you come out on top. Who comes out on the bottom? Who loses in that scenario? The person that wrote the option. Okay, because they're obligated. If you choose as a owner of a call, right? They have to give you 100 shares, right? And they're going to have to go buy those shares for $200 a share, right? But they're going to have to give them to you for 150, right? So you own them for 150, they're out. That sucks for them, but hey, you own them for 150, the stock's price is at $200, boom. You just made $50 per share on those 100 shares, and you could simply turn around and bam, sell them right to the market. And I think that's what's really cool about options, guys, okay? So we talked about some pretty advanced stuff. As a newer trader, this may seem pretty advanced. And don't worry, we're going to do a Q&A session. We're going to go back and answer all of your questions. But it's very important to know what options really are, guys. What are they, right? I'm sure we've all had that question at some point in our trading career. Why do they even exist? I mean, that's important, right? Why do they exist? Why were they created? Now you know. And the different types of options and the benefits of options, whether you buy a call or buy a put. So you know what I like to do, guys? I like to simplify the process, right? The last three sides may have been a little complex, a little intimidating, but again, we're going to do a Q&A session and we're going to make sure that you understand 100%. So the simple and most popular way to trade options, right? Let's simplify the process. So options are a great way to take advantage of a stock's movements without having to put up tens of thousands of dollars to buy those physical shares. You can simply trade options, but you never have to exercise that options contract. Remember, you have the right to do so, but you're not obligated to do so. So, how do we keep things simple? If you think the stock is going to go up, you would want to buy a call option. If you think the stock is going to go down, you can buy a put option. When you are in profit, you could simply sell the options contract and collect the difference from what you paid to the current value, right? That's how we make profits, by trading options. I have never exercised an option in my life. When I trade options, literally, if I think the stock is going to go up, I'm going to go buy a call. And if the stock goes up, right, the value is going to go up as well. So there will be a difference from what I paid to what the current value is. If I paid $1 and the stock's price goes up, that call option could now be worth $150. And I could sell that right away. I can just sell it, boom, done. And I get to keep $50 because that's the difference. And the same thing with puts, guys. If I think the market's going to go down, if I think the stock is going to drop, I would want to buy a put option. And if the stock does drop, I will get to collect the difference from what I paid to what the current value of that put option is. So we can day trade options and we can swing trade options. But remember, right, very important, options have an expiration date, kind of like a gallon of milk, right? It expires. Eventually, you're not going to want to drink that milk. You're going to toss it. It's trash. Options, just like that gallon of milk, have an expiration date. Eventually, you're not going to want to drink it. It's going to be worthless. You're going to throw it away, right? You no longer have that milk. You're out the money. So options do expire, okay? If you do not sell the option or exercise the option, all right, and it expires at expiration, boom, you're done. It just expired, worthless, and you will lose your entire investment. One thing I want to hit on real quick that we are going to hit on next week, and I want to throw this in here because I think it's important at this point in time. Why do I prefer to swing puts versus swinging a short position? Because we know the stock can go up indefinitely. And if I'm shorting physical shares, I can lose more than my initial investment. We've talked about this a lot. I could technically lose more than my initial investment if I'm actually shorting physical shares. But here's the really nice thing about options. If you want to short a stock, but you don't want to actually buy or short those shares, you can buy a put option. And here's the cool thing. If you don't sell the option, guess what? It expires worthless. The only thing that you lose is your investment. You cannot lose more than your investment with the put. But in a sense, you're shorting the stock, correct? If you think stock's going to go down and drop in value, you want to short it. How do you do that with options? You buy a put. But let's say it goes against you and you were wrong. You can't lose more than what you bought the option for. Worst case scenario, you lose your investment. So it's a little bit of protection, in my opinion. If you want to swing stocks short, there's a lot of risks with that, especially with physical shares. So you can get that added protection by just buying a put option. And the only thing you can lose if you mess up and make a mistake is what you bought the option contract for. Okay? So we know, right, what an option is. Why do they exist? The types of options. And we know how to keep it very, very simple, guys. Very simple. Stock go up, we buy call. Stock go down, we buy put. All we can lose is our entire investment. Okay? We can actually sell these contracts at any point in time. I get that question a lot. Josh, I bought this contract. Do I have to sell it at the expiration date? Nope. You can sell it whenever you want, guys. You can sell it whenever you want. You do not have to hold it until expiration. And that's one of the biggest misconceptions about options. And I had it as well, as I have 15 days until expiration. I have to hold it until there's no days left. No, that is false. If you have profits the same day, the next day, and you still have 14 days until expiration, you could sell the option at any point in time for a gain or for a loss. You do not have to hold it into expiration. So something that confused me a lot as a new trader with options were what we call the Greeks. Okay? The Greeks. You're like, the Greeks? We got Greek yogurt, right? Is that what we're talking about? Greek food? It's delicious. No. The Greeks. The Greeks are used to measure the risk and reward of an option. Again, I like keeping things very simple, guys. The Greeks are what affect the option's value. They are used to measure the risk or reward of a particular option. So the number one that we need to focus on, guys, is delta, right? This is one of the most important Greeks, okay? Delta. The delta is the amount the option contract will go up or go down for every dollar the stock moves, okay? So if the delta is $30, stock goes up $1, the option contract will probably go up right around $30, right? The delta, right, is the amount the options contract will go up or down for every dollar the stock moves. So if the stock goes up $1 and the delta is $30, that means the options contract will go up $30, okay? If the stock goes down $1 and the delta is $30, that means the options contract will go down by $30. So again, it's the amount the option contract will go up or go down for every dollar that the stock moves. The next most important Greek, right? Delta, very, 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 very important. The theta, very, 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 very important. The theta is time decay. So yes, with options, you have something called time decay. Time works against you, not with you. Physical shares, you can hold those indefinitely until the company goes bankrupt, if they go bankrupt, okay? But with an option, they will expire like that gallon of milk. And the theta represents the time decay. So the theta is the amount of money that you will lose for every day you hold the options contract. The closer to expiration you get, the higher the theta is. Believe it or not, the theta is it's just one weird, I don't know. The theta is like a little something like this. So let's say you have like a little axis, right? And this is the theta. We're talking theta, right? Let's say this is the first day the option goes live, and let's say this is expiration, right? This is what the theta does. This is the theta. That's it, right? The closer to expiration you get, the quicker it declines in value. The more the theta is, the more of an effect that it has on your contract. It's not like over, and it's not like slow and steady, right? It's like literally just whoop, straight down. So again, that's what it looks like if you look at the theta on like a graph, you know, from inception to expiration. Again, the closer you get to expiration, it will literally start just dumping on off, okay? So again, the theta is time decay. And this is the amount of money that you will lose, okay, for every day you hold the position, okay? The closer to expiration you get, the higher the theta is. So for example, let's say you buy an options contract, okay? You buy it today and you hold it to tomorrow. And let's say the stock does nothing. If you would have bought 100 shares, you would be break even, right? If you bought 100 shares at $16 today and tomorrow the stock is at $16, you wouldn't make any money, you wouldn't lose any money. But on an options contract, you have time decay. So same scenario, you bought one contract, the stock was at 16 bucks. Tomorrow, the stock is at 16 bucks. You're actually going to lose money. You're like, what? Yes, you're going to lose money because of the time decay. And it's the amount of money that you're going to lose for every day you hold the options contract. And always be mindful that the closer to expiration you are, the higher the theta is going to be, okay? Now, these are going to be two Greeks that you don't put that much emphasis on, but it's always important to know these things, right? It's just cool. It's nice to know what these other Greeks are. And there's a couple other Greeks like Rho, like Rio, Rho, I don't know. There's other Greeks that aren't that important, but the Gamma and the Vega aren't something you're really going to focus on too much, but it's nice to know these things, okay? So the Gamma is going to be the rate of change of the delta. So for every dollar move the stock makes to the upside, the delta will increase by the gamma amount. So for every dollar the stock moves to the downside, the delta will decrease by the gamma amount. So for this example, let's say the delta, okay, let's say the delta here was $30. So the delta was 30, okay? And we know that if the stock goes up $1, you're gonna make 30 bucks. Stock goes down $1, you're gonna lose 30 bucks, right? We can all agree on that. We got that? So the gamma is the rate of change of the delta. So let's say the gamma was $10, okay? So if the stock goes up $1, okay, the new delta would be 40, okay? If the stock goes down $1, okay, the new delta would be 20. So the gamma is the rate of change of the delta. You know the deltas are different. You got a $5 delta, $10 delta, $30 delta, $50 delta, right? And each strike has a different delta. Well, if you look at the gamma, you're going to see that the gamma represents, again, the rate of change of the delta. So again, for every dollar the stock goes up, right, you add the gamma to the delta, and that's going to give you a new delta. And the same thing to the opposite side. For every dollar that the stock moves to the downside, the delta will decrease by that gamma amount. And here in a moment, we're going to go look at an options ladder, and I'm actually going to show you exactly what I'm talking about, okay? So that's the gamma. Really not that important, but it's nice to know these things, okay? The Vega, again, something else that's not too important as, you know, possible day traders and just simple swing traders when it comes to options. So the Vega is the options sensitivity to volatility. So the Vega determines how much the price of an option will change for every 1% change in the volatility of the stock. Okay, so the Vega is going to be the sensitivity to volatility, and it's going to determine how much the price of an option is going to change up or down for every 1% the volatility increases or decreases of the underlying stock. Again, the Vega team, you're not going to really focus too much on that. But again, it's very nice to know. So again, we have the delta, very, very important, right? You definitely need to understand the delta and what it represents and be comfortable with the delta. You're going to be looking at the delta 100% of the time when you're thinking about trading a stock or trading an option. The theta, just as important, if not probably a little bit more important than the delta, because the theta is how much money you're going to lose. If the stock does nothing and if the stock sits sideways, you're still going to lose money. So you definitely need to know what the theta is and how it impacts your options contract. Like I said, if anything, the theta is more important than the delta. The gamma, not that important. It's the rate of change for the delta. So by looking at the gamma, you can get an idea of what the new delta is going to be to give an idea of what your future profits could be, okay? And then the Vega is the options sensitivity to volatility. Again, you're probably not going to put that much focus there. So I have an options checklist, okay? And I want to go through my options checklist because now we know what options are. All right, we know why they exist, the basic stuff, guys, but very important stuff. We know that there's two types of options. We got calls, we have puts, and we know what they represent, right? Stock go up, you buy a call. Stock go down, you buy a put, okay? You can sell it at any point in time for a gain or for a loss. You know what the Greeks are. You know which ones are the most important, delta and theta. And now you're probably saying, oh man, I feel good. I feel like I got some great knowledge today. I'm going to go trade some options. Back up. Hold on a little bit, guys. Hit the brakes, okay? There are criteria behind options, just like there's criteria behind physical shares and equities. And I actually have a checklist before trading any option. I don't just go out there and trade BBIG options. I don't just go out there and trade DWAC options, okay? Because there's a lot of things that we need to be mindful of when actually choosing an option to trade. And so I have a very simple options checklist, right? So when I'm looking at an option for a potential trade, I want to make sure the spread is less than 5%. Has anybody ever bought an options contract, sold it 2 minutes later, and they lost 50%? You're like, what? How does that make sense? I just bought the option like a couple minutes ago. The stock didn't do anything. I sold it. I lost 50% of my investment. That's happened to me, guys. It's happened to me quite a bit. So I put a checklist together. The spread less than 5%. So that means if you jump in right now and you buy and you sell it a second later, the spread being less than 5% means your loss would be less than 5%. But let's say the spread is 50%. You jump in right now and you jump out a second later. You're immediately down 50% on your investment. Yeah, it's crazy. So make sure your spreads are less than 5%. That's my golden rule. That's my rule of thumb. You have something called the IV, which is implied volatility. Okay. So you want to see an option, ideally for me, under 75%, especially for swing trades. Now, as day trades, I don't put that much emphasis on the implied volatility, right? But when we're swing trading, 100%. My rule of thumb is the implied volatility needs to be under 75%, especially on those swing trades. I want to find options that have high open interest. So what is open interest? Open interest is the total number of outstanding contracts that have yet to be settled. Okay? I was always taught by Matt, you want to find the option contract, the strike, all that good stuff that has a high open interest. And open interest is the total number of outstanding contracts that have not yet been settled, right? The higher the volume, the better, right? Which one's trading the most volume? Do you have one strike trading 10 contracts? Or do you have one strike trading 1,000 contracts? You don't look at the volume, you might jump in to an options trade, but not be able to get out. Why? Because there's no volume. If there's no volume, there's no buyers and sellers, correct? There may not be enough volume for you to be able to get out of that position. So the higher the volume, the better. The delta always needs to be 2 times greater than the theta, especially when swing trading options, okay? So if you're going to swing trade an option, please, please, please look at the delta against the theta. If the theta outweighs the delta, it's probably not a good one to swing trade, guys, okay? You always want the delta, in my opinion, my rule, to be 2 times greater than the theta, especially, right, mainly for swing trading options. Another rule of thumb I have is a minimum 45 DTE. And 45 DTE is days to expiration. So that just gives me time to be right. I'm not saying it's going to take 45 days to be right, but the last thing that I want to do is hold an options contract into the week of expiration. Why? Because the closer to expiration we get, the higher the theta is. The higher that the theta is, the more money we lose on the contract. We're not here to lose money. We're here to make money. So if we know the closer to expiration we get, the more we lose, let's go a little bit further out until expiration. So the theta isn't as harsh, right? It's not impacting the contract as bad as it would if you have a 10 DTE, 10 days until expiration, right? There's going to be a huge difference in theta between a 45-day expiration and a 10-day expiration. You're going to lose a crap ton more money on the 10-day versus the 45-day, assuming the stock does the exact same thing. Now, again, the further out you go on expiration, the more expensive the contracts will be. And I think that's the biggest reason why new traders lose so much money with options, is they look at a 45-day expiration and it's $1,000 a contract. They look at a 10-day expiration, it's $100 a contract. Which one's more enticing? The $100 a contract. So they start buying up all these 10-day until expiration, but they don't look at the delta compared to the theta, right? They don't even know what the theta represents. And before you know it, their contract's down 50% and the stock's done absolutely nothing, right? The stock's done nothing and they're down 50% because they're so close to expiration. Or you're only down 5% because you went 45 days out and the theta is not as harsh. However, when I day trade options, it's the closest to expiration. We call those weeklies, okay? Weekly expirations. The closest to expiration, the better for day trades, because the day trades 5 minutes, 10 minutes, 20 minutes. They're going to be cheap. We can buy more. They're going to move faster, okay? They're going to be better opportunity for profits, quicker profits, bigger profits. So as day traders, we're going to trade the weeklies, okay? They're going to be the closest to expiration. You have weeklies, you have monthlies, and you have quarterlies. That's how they're grouped. Now, the only contracts, ladies and gentlemen, the only contracts out there that have 3 expirations per week is going to be the SPY and the Qs. Okay, so the SPY, you have an expiration date on Monday, Wednesday, Friday. The Qs, you have an expiration date on Monday, Wednesday, Friday. Everything else is going to have a weekly or a monthly or a quarterly expiration. So if you're always wondering, like, why do all these, like Tesla, Netflix, Lowe's, Home Depot, why do they all have Friday expirations? Because those are weeklies. Then you'll see some that are every, like, 45 days? No, every month, every 30 days. Like, what is that? Well, those are monthlies. But the only 3 are the SPY and the Qs that actually have 3 expirations a week. So as day traders, we want to ideally, in my opinion, trade the closest to expiration. Okay? So I know this is a lot. We really broke this down as thoroughly as possible. And I know that there's a lot to digest. Right? I know we've discussed a lot. And I'm sure you guys have a lot of questions, okay? I mean, if I was given this lesson, I would have a lot of questions as well. But remember, this is just part 1 of 3 different parts, right? This is the basics. This is the foundation. This is for you to get an understanding of what an option is, how they move, why they exist, the different types, and how we can simplify this process to better understand options and how we can take advantage of opportunities in the options market. Again, this is just part 1, guys, but I know this is probably a lot. You're probably sitting here scratching your head about a few things. So let's go ahead and take this time to answer all of your questions before we actually move on to an option trading example. We're actually going to dive into an options chain. I'm going to show you all of this in real time. The theta, the delta, right? The implied volatility, spreads, all of that good stuff. We're actually going to go into an options chain and we're going to break it all down in real time, in real life, versus just a PowerPoint. So let's take the next couple of minutes, type up those questions. Let's go ahead and get those answered. Value bombs all day. I try, and I don't want to overwhelm you guys with information, right? Because if I just sit here and I throw 2 hours of options at you, you're going to be like, dude, I forgot what you said in the first slide. I don't want to do that. Information has to be easy to digest, right? Let it digest, let it sink in, ask the questions about what we just talked about. And then next week, guess what? We're going to step it up a bit. We're going to turn up that dial. And we're going to do it again. And we're going to do it again. Slow and steady so where it all just makes sense. So Movie Star is asking, how do you decide the strike? So let me ask you this question. How do you decide the strike? Are we talking about day trading, swing trading options, Movie Star? Or are we talking about something that we talked about here? Let's say you want to buy that insurance policy, okay? Are you wanting to buy an insurance policy in the form of an option or a day trade? Day trade. So how do you decide the strike? I personally do not look at the strike for a day trade. So remember, as a day trade, I'm trading the closest to expiration. And here's what I do, okay? Everybody's different, but I focus on the delta. Why do I focus on the delta, okay? Because the delta is what I'm going to make, and the delta is what I'm going to lose for every dollar the stock goes up, for every dollar the stock goes down. So in my honest opinion, right, we know we're going closest to expiration, okay? The strike is irrelevant for day trades. What's relevant? The delta, okay? Because here's the thing. You got a 457 strike, and you got a 464 strike. So if you buy a 464 strike and the SPY goes up $1, you're going to make $9. If you buy a 457 strike and the SPY goes up $1, you're going to make $50. I think it's more important to know what your potential reward is and what your possible loss is. So how do you even know what you're going to make? What do you even know what you could possibly lose? Again, the delta. So in the beginning, focus on delta. Okay, this comes from Matt, and this is what I do as well. 30 delta. All right, he's right around 30. He never goes into a 50, never goes into a 15. He finds that sweet spot. He will trade the 30 delta. But again, look at your open interest, look at your volume. So between these two strikes on the SPY, okay, we're 1 day until expiration. We're looking at a 460 strike call option, right? So we're looking at calls, a 460 strike, and then a 459 strike. Okay, they both have 30 deltas. One's a 31, one's a 38. Which one should you buy, Movie Star, or anybody? Should you buy a 460 strike for tomorrow's expiration, or should you buy a 459 strike for tomorrow's expiration? Which one should you buy here? Remember the lesson. Remember what we talked about. Okay? You're going to buy a 30 delta because the delta represents how much you make or lose for every dollar the stock goes up or down. So you're going to find a 30 delta, but which one? You got a 30 and a 37. Which one are you getting? Corey saying 460. Jason saying 460. Anybody else think differently, or is everybody on the same page? Go ahead and type. Day trading shouldn't matter because of the theta. That you are correct. So the theta really isn't super important for day trading. Now it is. It is. You want to be mindful because if your 5-minute day trade goes into a 2-hour day trade, guess what? The theta is going to impact in 2 hours. The theta is not going to really impact in 5 minutes. So it is important to know what the theta is for a day trade. Because again, what if you end up holding that contract for 2 hours? You're going to start to see a little bit of time decay, just a little bit, but in 5 minutes, not so much. So the reason you would go with a 460 and not a 459 is because of this. High open interest, high volume. Remember, options checklist. High volume, high open interest. Let's go back to the 460 and 459. The 459 has 42,000 on the volume and 13,000 on the open interest. We go down one to the 460, the volume is 104,000, substantially more. The open interest is 81,000, substantially more. They both have 30 deltas, so which one are you going to go with? Boom, right there. Why? It has more volume, and the open interest is higher, and it still has a 30 delta. Okay? So I hope that answers your question, Movie Star. How do you decide the strike? The way I was taught to decide strike for day trading, okay, for day trading, we're not looking to exercise the contract. We're not looking to buy or sell the shares. We're not looking to do any of that right now, okay? All we're doing is we expect the stock's price to go up. We need to focus on the delta because the delta is what we're going to make or lose for every dollar the stock goes up or for every dollar the stock goes down. Delta, delta, delta. Start with delta and then go from there. Look at your spreads, right? Be mindful of your theta. Look at your volume and your open interest. But start with delta in the beginning. That is going to simplify the options trading process and get you up to speed a lot faster, and you're going to start to get your feet wet. in its personal preference, you may want to go with a 50 delta. You may want to go with a 12 delta, right? Obviously, the lower the delta, the less you make, but the less you lose, right? If you go with a 50 delta, the more you make, but the more you lose. So again, it's all personal preference, but Matt taught me that it's easier to manage risk and reward, just keeping it simple, keeping it consistent. Find a delta that works for you and stick to that delta. It could be 30, it could be 80, it could be 10. Whatever works for you. Remember yesterday? Be your own trader, but start somewhere. Have a baseline, and the baseline, I would suggest, focus on your delta and go with a 30, okay? Psychologically, Corey's right. The even numbers do seem to be more popular, right? From a psychological standpoint. So I wouldn't say it's true or not, but rule of thumb to stick with even contracts that are 5, 10, 15, 20, 25, 30. You're going to notice more times than not, Colin, that every $5 or every hole, yeah, you're going to notice that they usually have the better volume and the better open interest. But again, we're focused on open interest and volume. So if the best volume, the best open interest, and the best delta for you is 462, are you going to go with a 462 or a 460? Well, I'm going to go with that 462 because it's meeting my options checklist. High open interest, high volume, right? Another thing too is what if the spread is really bad on a 460, but the spread is nice and tight on a 462? Which one are you going with? The 462. Why? Because spread is very, very important. So I wouldn't put too much focus, Colin, into 5, 10, 15, 20, 25, 30. It's unique. It's nice to know that, correct? It's very nice to know that. But your main focus is spread, right? The tighter the spread, the better. The higher the volume, the better. The higher the open interest, the better. And find a delta that works good for you, that allows you to manage your risk properly and to manage your reward properly as well. Let's go ahead and look over to YouTube. I am streaming this on YouTube today. I think this is of extreme value for everybody. So let's see if we have any questions. Glad you finally explained options. I'm here for a live only once in this market. Yeah. 460. Yeah, exactly. Any other questions, guys, right? This is the time to really ask any questions that you have. Because what we're going to do next, all right, this is pretty fun, is we're going to formulate risk reward on options. What we're going to do, we're going to calculate it, right? It's not as easy as buy a share, stock goes up $1, you make $1. Buy a share, stock goes down $1, you lose $1. It's not that simple. We have what we call variables. Those variables are the Greeks. The Greeks are going to determine what the future value of the contract should be, right? So it's not set in stone. There's a lot of variables, and these variables are actively changing, right? We know the delta changes because of the what? The gamma. Let me add the gamma in here real quick. I do want to show you the gamma. You're going to be like, wow, I never knew that. G-A-M-M-A. Gamma. Let's add the gamma. Okay? So look at the gamma. The gamma is 7 on a 460 strike. It's hovering between 6 and 7. That's a 30 delta. Add the gamma to the delta, you get your next delta, 37. Add the gamma 7 to the delta of 37, you get 44. Add the gamma 7 to the delta. What do you get? 51. The gamma is the rate of change. So for every dollar, the stock goes up. And what we're looking at is the SPY. Look, they're dollar increments. Dollar, 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 dollar. So this is a great example. We can see here all the way down to the bottom. Has a $9 delta with a $3 gamma. What's the next delta? 12. What's the next delta, right? How do we know what the next delta is going to be, right? We add the gamma to the current delta. Boom. we get the next delta, so on, so forth. Because remember, the gamma represents the rate of change for every dollar the stock moves, and it increases or decreases the delta. All right, so that's what, pretty cool about the gamma. Not a lot of people know that gamma, right? So if you're looking at, for example, a 458 call, right? On the first dollar move, you're going to make 44, right? If the stock goes up $1, you're going to make the delta, which is 44, okay? But what's it going to be on the second dollar move? It's not going to be 44. It's going to be 44 plus 7, which equals 50, right? Let's say it goes up another dollar. Well, your delta is not going to be a 50. It's going to be the gamma plus the delta. So it's going to be 57. So as the stock moves in your direction, your delta is going to increase. So for every dollar after the first initial dollar, you're going to make more and more and more and more money because the delta is going to get larger and larger and larger and larger and larger. How do you find the spreads? So the spread is the difference between the bid and the ask. Okay, so right here, let's use, these all have tight spreads. So look, right here, this blue highlighted line, the blue one, we're still talking 460. The bid is 93 and the ask is 94. What is that from a percentage standpoint? That's 1%. This has a 1% spread, right? The next one up, a 459 call option. The bid is 128, the ask is 129. It literally has a 1% spread. Let's go find something that has a really bad spread. Look at DWAC, guys. The bid is 325. The ask is 375. That's 50 cents. That is more than a 10% spread because 10% of 325 is what? 32. 32 plus 325 is what? Right? You can do the math. That's a big spread. So if you were to buy right now the $87 call option on DWAC for tomorrow, you're going to pay $370. And let's say you turn around and sell it. Boom, right now. You sell it. I'm out. I sell it. You're going to get $325. You're immediately down 15% on your investment. That's why we want the spreads to be less than 5%. Do you guys want to buy a call option and then 1 second later sell a call option and immediately be down $60, $70, $80? Right? That could be 10, 15, 20%. Do you guys want to lose 20% just to get in and get out? Yeah, no. I'm okay. I'm good. You got to be mindful of the spread. So the spread is simply the difference between the bid and the ask. Right, so we all good? The casino wins there. Yeah, for sure, right? If you're a seller with a large spread, that's great, right? If you're a seller, you're getting a nice little premium there. So all right, guys. So do we have any other questions? I know you guys have questions. Come on now. I think back to when I was a new trader, and I think back to when I first was introduced to options. Guys, I had 10 questions, 20 questions. Okay, explain this again. Explain that again. I have so many questions. So I know you guys have some questions. Don't be shy, okay? Ask away. That's what we're here for. So if you don't ask, you're never going to know. If you don't know, you're never going to be confident. And if you're not confident, you're not going to trade these right. Right? So get confident. Ask those questions. Get those answers. We're here to help you learn. All right? I'll give you guys about 2 more minutes, 3 more minutes to ask any questions you have. I want to try my best to give you guys a response. The spread should be less than 5%. That's my rule of thumb. Personally, spreads less than 5%. Rebecca's saying it's a lot to digest. It is. That's why I wanted to break this down into 3 days. Because it's so much. And we're not even we're not even close there. We still have so much more to talk about. So much more to talk about. But I want to do it slowly and steadily so you guys can digest this. So Rebecca, do you have any questions that are maybe confusing? Anything you're like, hey, this is just one thing that doesn't make sense to me. I would love to go back and re-hit on that. All right, because what we're going to do next to finalize this, okay, is how to calculate risk reward with options. The way I like to put it is how to take this options data, right? All of these variables, how we take this options data and how we overlay it on the chart, right? How we take it and how we just overlay it on the chart to get an idea of what our profit's going to be, to get an idea of what our risk is going to be. Well, I'll tell you what, Rebecca, I will edit this lesson and we will get it to you as soon as possible. So you can rewatch it, rewatch it, rewatch it. And if you ever have any questions, you let me know. I am always here to help out. So Jason is asking, so what's the safest way to buy options? Reducing the risk to 0 and profit probability to 100%. There's nothing. There is no golden strategy to where you have 0% risk and 100% profitability. So to answer your question, that is not possible, okay? There are safe approaches to buying options, right? And the safe approaches to buying options is to have a nice options checklist where you have to check all these boxes before you enter a trade. This is going to put you on the safe side, right? But there is no golden nugget hidden strategy to where you have 0 risk and 100% reward. That is simply not possible. Okay? How do you know how far to buy options? Weekly, monthly, yearly. It depends on what you are doing. It depends on what you're doing. Are you day trading, Jason? You're going to buy the closest to expiration. You're going to buy a weekly. Are you swing trading? You're probably going to go out a month or two, right? Monthly. Is it a long-term swing trade? Is it a long-term hedge? Okay. Is it an insurance policy against your long-term investments? If that's the case, you would probably go yearly. So it depends on the type of action that you're performing. Day trade, swing trade, hedging, aka your insurance policy, maybe against a long-term trade, like an investment, then you would want to go yearly. It really just depends on the type of action that you'd be performing. What does roll selected mean? Bought option on paper trade while you were explaining to try it out. We're going to talk more about that in the next lesson. And the reason why, I don't beat around the bush. I'm not the options guy, guys. Like, I know options. I can teach the crap out of them so that it makes sense, so you have confidence. But I want to bring on a more experienced, vetted, full-time options trader to answer questions like that. What does roll selected mean? And Corey actually said today he rolled his SOFI, right? He rolled his SOFI contract. So maybe Corey, right, who has more experience with options than I do, okay? Maybe he can explain what it means to roll your option contract. Hey, Corey, if you want 0 risk, don't participate in the stock market. I agree. There's always risk. It's helpful. Thank you. Absolutely. That's what I'm here for. I heard this years ago, and it is something to keep in mind. 70% of new options are closed within 3 months. So paper trade and get your feet wet. Absolutely. Paper trade until you get your feet wet. You want to know something else that's pretty scary to think of? That 90% of options expire worthless. Like, I've heard a lot of people say that. There's a lot of articles about it. They say it's pretty proven that 90% of options, calls and puts, will expire worthless. You think about that, that means, like, does that mean 90% of the time, you know, you're going to lose? You think about it, right? I'm not an expert, but rolling is basically selling one, then buying a new one in one transaction. So you're buying and selling in the same transaction. So rather than selling one, then buying one later. So rolling is basically selling one, then buying one in the same transaction versus selling and then buying in another transaction at a different time. Perfect. Perfect. I like it. And if you want more information about rolling, here's what we do here. We got great resources. We got a great team. Jason in chat throwing up that link, investopedia.com, rolling options. It is gold, man. I love to reference Investopedia. It's very, very important. It's very helpful, guys. It really is. What is the minimum dollar you must have to purchase to do options? You know, there's options that cost $5, guys. Like, literally. You can go buy an option for $5, right? It's $5 for a reason, though. It's probably not going to do anything, right? Options are a great way to grow a small account, guys. Why is that? If you want to buy, put this in perspective. Let me put this in perspective. The SPY. If you want to buy 100 shares of the SPY right now, guys, if you want to buy 100 shares of the SPY, 100 times 457. So 100 times 457. If you wanted to buy 100 shares of the SPY right now at the current price, you need to come up with $45,700. Right? $45,700. Check this out. The option is what? 100 shares of the underlying stock, right? These are times 100, right? 100, 100, 100, right? So essentially, you can control 100 shares, right? Essentially, you are controlling 100 shares of the SPY for $200 if you buy one options contract, okay? If you wanted to buy 100 shares of the SPY, you got to drop $45,700. So that's the really nice thing about options is you can control those 100 shares for far less, okay? Options are a great way to grow small accounts. Options are a great way to blow up small accounts if you do not know what you're doing. If you're YOLOing, 0 day to expirations, right? If you're out here dumping $500 into a really crappy strike, right? Because you're not really paying attention to what the delta against the theta is. Maybe the implied volatility is 500%, like all of these variables, right? Yeah, if you know what you're doing, you could really grow a small account. I've done it before, guys, right? Who was with me last year when I did it? Who was with me the year before during the pandemic when we grew those small options accounts? If you know what you're doing, it's very doable. It's so doable. But if you don't know what you're doing, if you're not educated, you will blow up your account. I speak from experience. I wasn't educated. I dabbled with options. I lost all my money. All right. So you know what you're doing. Great way to grow a small account because you don't need that much capital. You can actually make a lot of money on the SPY. The SPY may move 1%. The SPY may move 1%, ladies and gentlemen. But this options contract could move 20%. So you can make 20% return on your investment versus 1% return on your investment. Okay? Because again, these are going to move with the price. Remember, it's a derivative. The value, right? The value right here comes from what the SPY is currently doing. Now, yes, there's other variables, right? You got delta, theta, you have all these other variables, but this value right here, what it's worth, is derived from the movement of the SPY. So you're trading the SPY. You're just not trading shares. You're trading an options contract. So let's do this real quick. Let's end this. Or let me ask you guys this. We've been at it for an hour and 10 minutes. Do you want to go ahead and save how to calculate risk reward for tomorrow? And I'm thinking of Rebecca, right? I'm thinking of everybody in chat. This may be a lot. You guys may be digesting the crap out of this. And the last thing that I want to do is add something else to the plate that's maybe tipping over a little bit, okay? You want to go ahead and save the calculating risk reward for tomorrow? Okay, let's do that because this is a lot of information, guys. This is a lot of information, and I'm sure you guys are hungry too. So let's do that. Tomorrow, 11 o'clock, okay? Tomorrow at 11 o'clock, we will dive into an afternoon lesson, and we will talk about how to calculate risk reward with option contracts, day trading and swing trading. Basically, how to take this data, all of these really pretty colors, right? All of this mumbo jumbo, all this crap, how we can take all of this and just put it on the chart to give us an idea of what we're going to make and what we're going to lose. Yes, yeah, it took me about an hour and a half to build this lesson. It took me about an hour and a half to type all of this up. So yeah, I mean, I just wanted to make sure I was very thorough, but at the same time, I wanted to make sure that I wasn't giving you too much information to where you're like, oh my gosh, I'm just screw options. I wanted to make sure it was just the right amount, not too little, not too much, just the right amount. So I actually, at one point, I had about 13 slides on this PowerPoint. I had 13 slides. I'm like, that's too much. Let's break it down into 3 segments, and we'll continue tomorrow with calculating risk reward. Okay. And then next week, we will progress into day trading options and day trading strategies for options, and maybe put on a couple live trades with you guys next week for options. Exactly. Let's go ahead and review that market real quick, guys. Let's go ahead and review the market and see if there's any opportunity right now. BBIG, hey, look at that, guys. Look at that. I mean, it came down to 406 here, right? But it held above that 407 level. I know it's 408 here on my chart, but it was 407 to 411, right? Remember, it was 4 cents. 407 to 411. We broke, took for freaking ever, but we held, and it ripped to our 437 target. Almost a penny to almost a penny on BBIG. DWAC? I'm not, yeah, SOFI was a beauty. Right now it's sitting sideways over lunch. DATS. Unfortunate. That's all I have to say. Unfortunate. And then ANC, little pop, little drop. How's the SPY looking today? A whittle green day. And here's the one thing why I don't use hard stops. I know, guys, that I'm here to teach you the right things, but this is why I don't use hard stops on Home Depot. The spread stopped me out. Remember I said I don't want to put a stop in because the spread would stop me out if I can't manage it, like really manage it. I put a hard stop in. Literally, the spread was 70 cents. The spread stopped me out, but I don't know. If I was actually watching this in real time, I would have never got out of that. It's unfortunate. So the spread was 70 cents, and the ask just happened to jump up. It stopped me out, and then right back down. Literally right there. Foop, foop, and then dump. And I'm like, man. Coulda, shoulda, woulda, though. Coulda, shoulda, woulda. That's why I use mental stops. So that's a little bit of a tip. That's why I do mental stops more than hard stops. Because every now and then, if you're just reading the chart, you may not get confirmation to stop out. Like, these were upper shadows. So these were upper shadows. I would have never, like, got out of that trade on an upper shadow. It'd have to be a closure. But the simple fact that it pushed up, it stopped me out, you know, so be it. It happens. All right, guys. So it's 12:44, and woo! I already came in tired today, ladies and gentlemen. 5 hours of sleep, going extra hard. It's already 1 o'clock. My goodness. Ladies and gentlemen, enjoy your lunch. Once again, congratulations. Good work. Keep it up. We are absolutely crushing this really challenging market, guys. Like, I'll be the first one to say it. Okay, this market is not normal. This market is challenging, right? We have a lot of very experienced traders here inside of chat. And it is challenging. So if you feel like it's challenging, it's not you. It really is the market. The market is volatile. The market is choppy. The market's challenging, especially these penny stocks, right? So we have to be calm, cool, collected. We have to be patient and disciplined and realize it only takes one good trading day to hit our goal. We don't have to trade every day. I didn't even trade my main account today, guys. My broker was not even open. I only was playing around with Fidelity. That's the thing. Like, there's nothing here, guys. There's nothing here. So for those of you being patient, being disciplined, sitting on the sidelines, I'm proud of you. That takes a lot. It does. That takes a lot of freaking discipline to be able to sit back on the sidelines and just watch. For For those of you that found A+ setups, for those of you that were able to apply your edge in the markets, congratulations and enjoy those profits. Okay. So that being said, choppy day, slow day, challenging day, sit back, relax. Maybe you take the day off. Maybe you just kind of come back around 2:33 and see if there's any movements. Okay. With that being said, enjoy your lunch. Good job and good work. Keep it up, because January is going to be your best month yet. And I promise you, as long as you keep pushing the way you've been pushing, 2022 is going to be your best year yet. Okay, team? Enjoy your lunch. If you guys have any questions, please let me know here inside of chat. And I'll see you guys back here maybe a little bit later this afternoon. If I don't pop in this afternoon, I will see you guys back here bright and early tomorrow morning at 7 o'clock a.m. Eastern Standard Time at the start of pre-market. Angel, fantastic lesson. That was like a legit college class. I love it. Thank you so much, Angel. Boosting that up a little bit, making me feel good about the work I put in on these lessons. So, awesome stuff. Awesome stuff. I absolutely love it. So thank you, Angel. Thank you, Dougie, Rebecca, Corey, Jason, everybody inside the chat. Enjoy your lunch. Be smart and trade safe. And I may see you back here a little bit later this afternoon. But if I don't see you tomorrow morning, baby, enjoy that lunch. Enjoy the rest of your day. In 3. I was waiting for Angel to hit me with it. In 3, 2, 1. Woo! Good job, team. Good work. If you need anything at all, do not hesitate to let me know here inside the chat. I am always here to help you guys out. Good job. Good work. Enjoy your lunch. And I'll see you guys a little bit later on. Take care, everybody.